Good morning, good afternoon, good evening, and welcome to our Topstep TV for opening call. Yes, you're at the right place at the right time. Of course, yes, you are at the right place at the right time. Once again, if you are new here, the first time watching Topstep TV, congratulations. You're also at the right place at the right time. So good to go. I'm Jake, and this is Elwood. We have an exciting, informative, and educational programming for you today. And throughout the week, we will be your trading buddy, your trading mentor, newscaster, fellow trader, and even that sweet lady who lives next door who offers you fresh prune pudding every time she makes it. Get yourself ready for some top-notch, up-to-date market trading knowledge, know-how, and we have our good friend, John the Hogue Hoagland. Good morning, John A.
Good morning, Eddie, and good morning, everyone. Happy Tuesday, November the 7th. Excited to get this day started. Opening call, always focusing on context, risk management, and patience. How you feeling today, Eddie?
You know what? I got a good feeling. Sun's out today. It's a nice, cool fall day, and that's my favorite time of the season. Nice fall, cool day.
Yeah, it's always fall is like probably one of my favorite times of the year. You know, like temperatures cool down. One thing I don't like about it is the lack of light. I mean, last night it was like pitch black at 4:45.
Yeah.
That's going to continue until the December the 21st, when then the days start getting longer again. But we will deal. It's always it always seems like the older I get, the more the time change and the lack of light affects me. But we'll get through it.
We'll get through it. Johnny, we got some news today I want to share with everybody. We got some numbers coming out here today. U.S. stock futures took a dive here today, pointing to some pullbacks from recent gains, and investors weighed the relative strength of the rally. Now, Dow futures earlier this morning were down 0.3%, S&P down 0.3%, and the NASDAQ down 0.2%. So some of these indices ended the prior session in the green, with both the benchmark S&P and the 30 stock Dow Jones average, industrial average, posting their first 6-day winning streak since those hot days in summer. UBS posting its quarterly loss, and UBS reported a wider than expected $785 million loss in the third quarter. That's a lot of cash to lose. The Swiss lender was hit by costs related to the ongoing integration with the former peer Credit Suisse. So they had a merger, and I guess things didn't work out. Sometimes that happens. Over in China, China's looking a little bit better here with their imports. They unexpectedly expanded in October, fueling some optimism for a rebound in domestic demand. So imports in the country grew 3%, topping expectations of a decline of 4.8%, and improving in September by 6.2%. So congratulations, China. Johnny, what do you got?
Well, there's some smaller economic information due out today. You already talked about the trade balance, which came out considerably deeper than expected due to increase in imports from China. Already this morning we had Neil Kashkari talk, we had Goolsbee talk. As the day goes on, 8:15 we have Barr, 8:50 we have Schmidt, 9 o'clock we have Waller, 11 o'clock Williams, 12:25 Logan, and at 2 o'clock this afternoon Central Time, Consumer Credit comes out. As far as earnings are concerned, it's a long list of earnings, a lot of smaller companies, but still a very long list. So we got to keep an eye on overall how those are going. You mentioned UBS having a little bit of trouble with their revenues. Uber beat on earnings per share, but down a little bit on revenues. And Nintendo, everybody's favorite game consoles.
Used to be.
beating on earnings and revenues. After the close, Gilead is due out, as well as Occidental, but it's a long list. No major earnings due out today, but still, those will be viewed, will be digested, and will be affecting the markets at some point today. VIX up a little bit this morning, but lower than yesterday at this time. It's 15. Pretty low number for the VIX there. It was 15.35 yesterday at this time. Dollar index 105.66, which is a little bit higher than it was yesterday at this time. Maybe having something to do with the dive in gold that occurred overnight, but gold is now recovering. 105.66, again, that number in the dollar last I checked. And the yield on the 10-year, pretty much exactly the same as it was yesterday at this time, 4.6%, but up a little bit on the day, I believe. So that's what we're looking at as we come into the opening, and getting a look at the charts here in a couple of minutes.
Johnny, you put out a poll, I think it was last week, about crude. It's going to hit 75 or 95 first. And to be honest with you, I went to 95. I thought that we'd be sort of topping out here, but looking at it, getting very close to that 75. Now, we do see that oil prices had slipped today, obviously with the mixed Chinese trade data adding to concerns over sluggish demand. We saw the crude futures, U.S. crude futures, traded 2% lower, and we did break that $80 a barrel. Brent dropped 1.9% at 83.53. And some of this has to do with the Saudi Aramco. Third quarter income dropped by 23% in the third quarter. That's huge, reflecting a downturn in oil prices and volumes that was only partially offset by the reduction in production royalties. So get your shit together, Aramco.
Seems economic numbers, economic worries are kind of outpacing the cut in production. We still haven't hit that 75 number yet. I don't remember how that poll came out, but I'm pretty sure it was a lot of folks were looking more like at $95 before $75 first. But right now, it's certainly heading that way.
It was leading that way. But John, you like chicken nuggets?
No, not like McDonald's chicken nuggets, but I do. There's places around here that do sell fresh chicken nuggets that are really good.
Yes or no answer. Yes or no.
Right.
You like chicken nuggets. Tyson, folks, if you look in your freezers, Tyson has recalled nearly 30,000 pounds of these fun chicken nuggets. Tyson food, the thing is, they're finding metal in it. So, I mean, if you're feeding your kids, they're like, Mom, my gums are bleeding. You might want to check on that. They're called Fun Nuggets, okay? And they're shaped of dinosaur-shaped patties. So
I was wondering if those were the ones.
Those are the ones. My gums are bleeding on me. Yeah.
No.
So they're sold in 29-ounce bags. 29 ounces. Why don't you go 30? See how they do that to you? You think you're getting a lot? No, just give them 29.
Yeah. Instead of raising prices, they reduce the amount of actual food that's in there. Sorry about this, Rooster. Rooster's like, hey, watch it.
We're talking
about chicken nuggets.
Yeah. But yes, you're absolutely right. When's the last time you got a bag of Fritos? They're like paper thin now. It's ridiculous. But anyway, just checking your freezer. We want to make sure that everybody's safe and sound and enjoy their chicken nuggets.
It's funny you said Fritos. We got little bags of chips and stuff for the trick-or-treaters. We have a bunch of them left over. I had my first little bag of Fritos probably since I was in 8th grade yesterday.
You see how thin they are now? I mean, not because we've grown up. I've been eating Fritos for a while. And I opened the bag the other day. I'm like, oh my God, they're like paper thin, So that's what they're doing. They're just cutting back on quality and raising prices. See how they do that?
It's been so long, I didn't even think about how they were. I thought they were
next bag you open,
from what I remember, but
yeah. But anyway, we got some time here. We're talking too much. Let's get busy with these charts, my friend.
Yes.
S&Ps. Let's go to the daily ES and see what's cooking.
All right. Yeah, we just like start kind of further out and work our way into that 30-minute chart. So look at the volume yesterday. Pretty low volume, little range. And the upside auction, as we have kind of been talking about, it's done okay. It hasn't been great. Jim Dalton was talking about this market really needs to consolidate here for a continuation to the upside, or even a deeper pullback might be actually healthy for a continuing upside auction. But finally, yesterday, we saw some decent open interest come into this market, adding 19,000 estimated new contracts on a very small, very narrow day. So we finally got maybe some longer time frame traders adjusting inventories close to this weekly kickoff high, which is 43.94. Starting to look like we're creating some consolidation here. When we look at this, we've got an inside extended trading hour range starting already. We haven't seen that in quite a few days. So we're going to see if we can consolidate here, even out some inventories, and then maybe see if we can get that continuing push to the upside that everybody is so anticipating towards the end of the year. We call it the Santa rally, maybe a little bit early. Maybe it's the turkey rally, and hopefully, Rooster, you're okay with talking about turkey because it's, a little different. But so it looks like that weekly kickoff high today may end up being in play. Again, that's 43.94. Our overnight high 43.81.50. So we've got some space to get up there, but we'll see what happens. We're also kind of wrestling with this 50 session moving average, which is getting a little bit too close to the 200 session moving average for my taste. We'll see how this all plays out, of course, over time. Remember, there's still a lot of uncertainty out there. Anything can happen, ACH, and with little to no economic numbers, there will be a big focus, of course, on earnings. Don't forget about all the talking feds that are talking today. So hopefully they're going to be a little bit guarded in what they say and don't do anything to shake things up in these equities here too much. Although that might provide us with some decent opportunity. I'm thinking more long-term and how my investments would look much better up around 5,000 than down around 4,000. So take a look at the 30-minute chart. Wally.
Hey, Mo.
So here's that very narrow range that we put in yesterday. We had negative delta on this push to the upside. We actually ended up having a lot of negative delta yesterday. The market attempted to try and continue lower, which was rejected, where settlement came in 43.84 quarter. That's an 8.25, an eight handle, or 8 point and a tick move to the upside. So it actually didn't close bad. Overnight inventory, we've resolved that. There's no overnight inventory. The market opened here last night. It traded back to it. So any overnight inventory has been reconciled. That will not be a factor in anything that I'm going to be looking at this morning. Looking like we're going to open inside the range. We've got an inside regular trading hour range. The market is exhibiting the idea or the possible hypothesis that range-bound trade may happen here for a little while. I'll be watching yesterday's low, our overnight low on the downside. And of course, I'll be watching yesterday's high, last week's high, and weekly kickoff high to the upside for some opportunities. But if we open in range and in value, that's going to keep me a little bit back in my seat and say, okay, maybe better trade locations will come as the day goes on. As an explanation of that, we had the market open above value yesterday. The best trade location did come early in the opening range, but it was a very wide opening range. If you remember, for the first hour, 2 hours, 3 hours, the entire range was twice the opening range. So there wasn't a lot of activity early in the session. The market did look lower. When we were in group coaching, we pointed out the idea that, okay, the market is getting relatively cheap compared to where the buyers really stepped in on Friday. So we've got a little bit of excess off this low here in these long shadows. Not a lot of excess as far as the profile is concerned, but we're going to be opening in range, in value. Try and stay patient. Try and stay patient. Better opportunities, better trade locations are likely to come as the day goes on. The profile yesterday had excess at the high. It still had excess at the low, but a little kind of lower excess. And we're opening between those areas of excess. Too expensive yesterday, too cheap today. Too cheap last night. Maybe we'll get a look above here to see what happens. If we do start taking this market apart, if something happens and we start moving lower, there's oodles and oodles of visual targets down below. And yes, oodles and oodles is an industry term. Gaps, naked points of control, another gap, more naked points of control, another gap. There's all kinds of weak structure down below to be targeted if price does head that direction. But again, I'm going to stay patient, wait for the probably the early range to establish itself, and then really start to focus on those extremes for my opportunities. Market is not really exhibiting big changes in the perception of value. Therefore, I'm going to stay patient. Let's see what we've got here now in the NASDAQ.
Yeah, we are pushing some time here, Johnny, my friend.
Yeah.
Nice little rally kicking it.
I'll get through it here. Again, low volume. We did add open interest yesterday on a small range. The range was overlapping to higher the previous day. The market did close above last week's high. It is kind of continuing this push to the upside where the S&Ps has sort of fallen into a potential range-bound opportunity. We're already seeing range extension above the extended hour range on yesterday. So, NASDAQ is presenting as stronger. It is currently up 0.25%, where the Dow and the S&P are still presenting as lower on the day so far. So the NASDAQ may end up being a leader to the upside today if that's going to be the case. Weekly kickoff high, we still got some space to get up to it. One thing I do like about it is we're above the 50 session moving average. We've got the 100 above. We've got this trend line above. Those will both be barriers to continuation to the upside. We did add some open interest, 3,100 yesterday. The NASDAQ has been adding more open interest overall, kind of proportionally to what the S&P has been doing, but very low volume yesterday. No important information. Here comes that trend line. Let's see what we're looking at here on the 30-minute. So we are getting really close to that trend line. On the 30, it looks like we've broken above it. We are going to be opening with a gap. Pretty good probability of opening with a gap at least. We've only got about 10 minutes here before the open. So if we open with a gap and can't close the gap, that's going to probably incite me to be a little bit faster looking for opportunities if I were going to be trading the NASDAQ. The close above last week's high, I find interesting. There was actually a delta divergence yesterday in the NASDAQ. The delta by the end of the day was negative 5,600, which is pretty deep negative delta for the NASDAQ, which closed near the high of the range. So all of those short time frame shorts yesterday got short in the hole and ended up covering and bringing price back above last week's high. Opening with a gap now, that's important. Profile yesterday, normal variation day neutral, excess on both sides. Normal variation neutral day means that the market may go looking for new opportunities, new levels to facilitate trade today. And again, opening with the gap offers us a little bit more opportunity for trades early in the session. I don't know if we have Michael with us today. I may take the part of Michael today and trade NASDAQ like a madman. I don't know. That sounds like it might be kind of fun. All right, let's take a look at crude oil. We were wondering, are we going to hit 895 or 75 first? We've certainly got some downside structure here. We had a 5-day balance, a lower 5-day balance. We've broken now below that 5-day balance. When we break balance, the idea is to go with it. The market is already pretty much had a deep move below that area of balance. Weekly kickoff low is 78. That would, of course, be my target to the downside. We lost 1,300 in open interest yesterday. Volume was very low. That tells us that this balance area has used up its ability to facilitate trade, and it makes sense to me that this market is now seeking new levels to facilitate trade. We're going to monitor this move to the downside for continuation, and however you choose to monitor for continuation. Here's yesterday's very narrow range, low volume. We lost open interest. People didn't seem to care. Well, I bet they care now. Overnight inventory, very short. Opening with a gap, yes. Gap rules, if we can't close the gap relatively early, we look for opportunities in the direction of the gap. Looking at the profile here, it appears as though we almost left the opening range at the high of the day. We did take about a 4-tick look above it. We're continuing this move to the downside. It's going to be hard for me to try and choose a good trade location if this market continues to try and push lower. Of course, weekly kickoff low would be something I would think about. Overnight inventory, short. Gap, yes. Can't close the gap, look for opportunities in the direction. There's always that risk of the overnight inventory chickening out to the short side and giving us an opportunity for better trade location at higher levels. Gold. Eddie's gold.
You know, I tell you, I'm calling that market. I'm hands off today because I made a profit yesterday, but I made a profit on the bull. I thought the market was going to recover, but I got in and got out, but it didn't. I mean, obviously, we're seeing a recovery here right now. But what do you got for us here, Johnny?
I made money on the long side in the S&Ps yesterday, and most of the kind of move was to the downside when I was making money on the long side. So,
right, same here.
All right, so gold. We had a whole bunch of indecision up here. We are running the risk of breaking below this area of indecision, and I'm basing that on the weekly kickoff low. That's going to be pivotal, but of course, we always want to make sure we're aware that sometimes if there's no quick decision by longer time frames at weekly kickoff low, they can become magnetic. So you can get yourself chopped up there. Taking a look down below, there's a lot of space, and there's some weak structure down there as well. So far today, the 720 open has been the low of the regular trading hour session, indicating rejection of price at and below weekly kickoff low. Take a look at the 30-minute chart here. All right, so overnight inventory was obviously very short. We had a little stutter step here at last week's low. We got a little stutter step here at weekly kickoff low. The opening range, the 720 opening range, was relatively small and is the absolute low of the regular trading hour session. This overnight inventory got nervous at 720 and said, you know what, I don't think we're going to continue. They started to reconcile those positions. Whenever we see this opposite move, when there's a deep overnight inventory, you're going to take care of that old business first. We'll see how this day ends up playing out. But as long as we hold above the opening range and above this weekly kickoff low, I think the opportunities may be for a return to the upside. However, weak structure down below. I did a lot of research in this. There's a gap from about 1951 down to about 1944. Naked point of control here at 1937.60. Another one, 1925.60. Another gap, 1910 down to 1899 is the year my grandmother was born. So that got to
God bless her soul.
She was like 102. She was born in 1899 and died in 2001. She was alive in 3 different centuries. Unbelievable. Wow. 1884 is that next naked point of control down below. Below that, I don't know what to do below that. But I mean, the likelihood of us reaching that at any time in the near future is pretty slim. So watch for your opportunities. Opening range the low of the day. Weekly kickoff rejected down below. So as long as that happens, I'm probably going to be, that opening range, the low of the day. That's a general rule to me, is I only look for longs when that happens. And that is what happens. So I don't know. We'll see what happens throughout the day. Looking forward to an interesting trading day, as they always are. Make sure you take your deep breath. Stay humble, grateful, creative, and centered in your trading today. And let's, as Stacking Bananas says, stack some bananas.
And of course, John, always, what's your line? Pray for peace.
Yes, of course. Please don't forget, everybody, pray for peace. We need all those prayers. Thanks, Eddie, for reminding me.
We're going to take a few.
Patience, discipline, and management are so very important each and every trade day.
Remember that. Remember that. We'll be right back with Fast Market. Welcome to Fast Markets, and we're inside a minute here, so let's get the ponies in the gates.
Oh yeah,
there they are. And look what we got. We got Michael here and Andre. Michael, Andre,
morning.
Welcome aboard, gentlemen.
What's up? Good morning, GM.
Good morning. Marcus just popped. Goldsby must have said some stuff.
Stuff's a movement, eh?
Hell yeah.
Stuff is
Well,
all right,
Bar was the one.
We are off.
We are off.
Giddy up.
I'll sell 100 at 50.
Oh.
100 at 40. 100 at 30.
20 bid. 20 bid.
John,
Good morning. Saucy morning.
So Johnny sold you 100 at 40.
Oh boy.
And 150, didn't you?
Yeah, 100 at 50.
We got an out trade?
We got an out trade. Uh-oh. Where's your trade checker?
There's like a whole list of things that the talking feds have already said this morning. That's like, how do you decipher all that stuff? Forget about it. We'll look at the markets here.
Amen.
Well, what are we looking at, Michael? You looking for levels?
I'm looking for this little green red thing that CNBC always does. I think it's so dumb, but I like
heat
it.
map?
I watch a heat map.
Yeah.
Yeah, I'm like, they never did that. Then they throw it in there. It's like, ooh, okay.
They do it every open and every close.
NASDAQ opened with a gap, my friend.
It did.
Okay, so what does that mean? Let's talk. Let's talk shop. Let's talk
Well,
NASDAQ.
if we can't close the gap relatively early, we're looking for longs.
So pullbacks. Okay, guys. Out of the gate, guys. We're already talking about what strategy. People,
Exactly.
what strategy you guys talking about?
Let's watch this.
Well,
You got to reverse
pullbacks.
Yeah, we do.
Yeah.
Opening range
pull-
breaks to the downside in the S&P and the NASDAQ.
All right. So out of the gate, opening range is breaking to the downside.
Yep.
What does that tell you?
Well, seller control in the first 2 minutes.
Okay.
But again, the NASDAQ opened with a gap. If we can't close that gap and the gap closes down to 257.50, if we can't close that gap, we're going to be looking for longs.
Okay.
257.50. 57, 258, 260.
Well,
257.50.
yeah, I think that might be the leader.
257.50.
I think you might be right, Eddie. To the downside, right?
Yeah.
Yeah.
Yeah, so NASDAQ's been leading. Well, not today, but
Looks like
NASDAQ's been leading for quite a few days.
Crude's pushing those, getting close to those 75s by about $1.
Wow.
A little over $1.
S&Ps did not open with a gap.
So NASDAQ opened with a gap. S&Ps did not.
Did not. S&Ps opened in range and in value.
Okay.
My God, man.
James, I'm going to share my screen too. Give
There you
me
go.
a memento. I'm only on here for like an hour, and then I got the coolest thing to go look at, guys.
Awesome.
Well, I mean, one of the coolest things.
You probably don't want to tell us yet, though, do you?
Yeah, I do. It's a new top.
You're buying horses? You're getting horses for the ranch.
I bought one for my mom. I think she gave me her lame one. It's one of these ones that's like, oh, you like Cisco? It's great for trail rides. It is. It is. Andre, you rode Cisco one time.
Benny. R.I.P.
Is that
Benny.
name like? Oh, it's like Cisco, like the thong song.
Come on, you gotta say that. Yeah, that's exactly what my mom's named it after, Jack.
Oh, what a banger.
Oh no.
You got it. Good morning. Welcome to Topstep TV.
Yeah.
Yeah. Good morning. Welcome to.
Welcome to the pirate
Yeah.
ship.
So Eddie, that's where I'm going, Eddie. I'm going to possibly lock in. You cannot find a better location in the city of Chicago for our live Topstep TV studio. That's ground level, right off the streets. So people are walking by like fast money, putting a whole studio in. Yes, we are investing in continuing to trade with you folks because we like it.
Wow.
If not, we'll just trade out of it.
Just like ESPN, they do that on Michigan Avenue. They were doing that, I think. Or
Oh, well, yeah, I mean,
the radio
yeah, this is
station.
yeah, this is I gotta tell I will tell the location. It's in the Chicago Board of Trade, street level. In the Chicago Board of Trade, street level. You know where Burling Bank is, Oakland?
Yeah.
Guess what? It's available.
Really?
Wow.
Breaking.
I got my first loan there, but it was Harris Bank then.
That was Harris.
That was Harris Bank. I got my first loan. Paid off my condo there. Walked in and said $234,000 check. Boom. I've been saving up on my trading and paid off my condo. I go, I'd like to pay off my mortgage today.
That's a good feeling.
At 28 years old, it was a hell of a good feeling. Now, I didn't make money on that condo because I held it for 15 years in Chicago, and you don't get any appreciation. I actually lost 10 grand, but I told you guys that story already.
Burling Bank.
Burling Bank, yeah.
Burling Bank. That's what it was. Not First Chicago.
Well, no, Burling Bank's still there. I think Burling Bank moved. Whatever. It's on the first floor. Yeah, it's gonna. Sorry, we go talk to them. They're locking it in a museum too. They want to build a museum in that space. And they found out that I want to do a Topstep TV and a broadcast out of it. All right, we're 70% short.
Yeah, tilt's short and we're breaking.
Wow, huge.
All right, and
What do you got, John?
It's gravity,
Yeah.
man.
It is gravity. Boy, they
we
just,
have certainly filled the gap.
yes.
Now the question is, do we accept value from yesterday or reject it? So value high in yesterday's TPO profile, let me give you the number, is 238. 238.
Hey guys, I got long down there at 34 even.
Nice.
NASDAQ settlement. 2 guy.
Boy, you just
Guy-
get in there.
You took that bounce. Nice.
Yeah.
Yeah.
Well, it's right back to it right now. I had 10 handles in it, but we are still seeing it tilts like 60%, so it's not anything.
Not
They peeled
terrible,
off, right?
Yeah, they peeled off a bit. Not anything to write home to mommy about, but 37s is the average shorts. This thing might want to go. All right, I'm cutting out of that one. Cutting bait just for a second.
Yeah, it just looks like there's room to the downside here.
I like this 50 period moving average on the 30-minute because it's also shoulder on Johnny's volume. But I want to get it just a little bit early because I think everybody sees it. And tilt is a little short.
Tell you, I was dialed in to sit on my hands, but I don't know. We're getting some decent moves here.
Yeah. Well, that opening range in the NASDAQ and the gap close was great. I mean, both the NASDAQ and S&P have the opening range at the high of the session. But because the S&P opened in range and in value, I did not take it, and I'm ruining that now. But we don't know. Better trade locations may come.
I got a feeling, John, with only 7 minutes into the day, we might find some more opportunities.
Yes. I hope so. I'm not wearing my rally sweater today.
I noticed that, John.
We'll see how this plays out. I should probably be looking short because I'm not wearing the rally sweater. We already have a one successful trading combine. Trading Daddy's passed the 100K this morning. Nice job.
Good job, Dad.
Good job.
Nice job.
I think somebody else did. Did Daniel? Daniel, did you pass your? Somebody else did. Let us know if you passed your trading combine. We want to know.
What's your position, MP?
I'm long 30s right here, but I'm light and tight because I still like it lower.
The Chicago Bull.
Double.
I
Don't
see my
feed the
friend
bears,
Josiah
Andre.
here. Good to see you, Josiah.
11s. Oh, wait. I was trying to do a dance around the settlement.
Let's get this number up here. 1875 peeking in at Topstep TV. The number should be. Well, let your friends know. Let's pack the house here today. If you like what's going on, hit that like, share, subscribe.
Yep.
Subscribe.
So, John, what levels do you then have below settlement here in the NASDAQ?
Okay. So here's the profile. We opened outside of range and value. Here's
give me levels
yesterday's,
just because I'm looking at my
yesterday's
screen and
range.
you're over here. Yeah.
Yesterday's range. Here's our open. Levels. I'm watching the high of value from yesterday, that 415, 239 that we talked about. Because if we show signs of acceptance below that level, the value area special situation play comes in, and it's likely, good probability, that price will reach the other extreme of value at some point today, which takes us down to 15,183.
Okay.
All right.
15.
So it's all about reacceptance in yesterday's value.
Okay. What do you like the 239s?
I do, because that's really the kind of pivotal level. Are we going to reject below it and rally from it, or are we going to accept below it and then finish the value special situation play down to 183?
All right, so it's here right now, 239. What's that telling you? 60% short, and then in the Nasdaq on the tilt.
Well, the reacceptance of value is very subjective, Michael. This can be a very tricky trade because you're going to have a tendency to want to go long above it and short below it, and long above it and short below it. So you can get chopped up here. When I first learned about this 30 years ago, we were really supposed to wait until 2 30-minute bars closed below the value area high from the previous day. That again is 239. So, if you're going to wait for 2 30-minute bars to close below there, sometimes it's going to play out without you. Sometimes it's going to look like it's accepting and then go away from it. It's a very difficult trade to try and manage. What I would say right now is, we've looked below it twice. We are back above it. Are you long now?
No, I'm nothing now.
You're flat now? Okay.
Yeah.
Yeah. So
I was banging out the settlements, looking for a long down there. It did pop a bit. No, you would have taken a little heat on it, but I was dancing around that.
right. So it's kind of a long above, short below type situation,
Up to
but it could
39.
chop you up all day before it picks a direction.
Yeah.
You mean like yesterday?
Well, you didn't get hurt yesterday, bad, right?
No, not me. No, I'm saying chop you up, then it picked a direction.
Oh yeah. Well, the morning was a nightmare yesterday.
Then it fell out of bed all of a sudden.
Yeah, and then it returned all the way back.
Yeah, you said you made money to the upside, John?
I did.
Isn't that funny?
I know.
I did that in gold too.
Yeah.
Called the wrong direction. I caught it at the right time.
Yeah.
Here's what it was yesterday. I think this is the right one here. No, that includes the overnight. Hang on. Here's the thing yesterday.
Just crushing it.
Was, the market had really negative delta all day on Friday, and the market closed near the high. Really negative delta all day yesterday, but the market brought price down to where the buyers really started to come in on Friday. I mentioned this during group coaching, and I caught a piece of this move back up higher.
Nice.
Mm-hmm.
So you played the
D
Friday
Hall,
levels.
what happened?
It was we're right back up.
Yeah, D Hall, what happened to your 20-point stop? Yeah, I'm not letting them go in the morning. Which we can talk about it too if it's right or wrong. To go to that because I'm kind of like looking for a great entry, so I'm positioning. It hasn't totally hurt me, but at the same time, getting something psychologically about getting in a couple decent holes. Loser, 20 handles, 40 handles.
Right now you are? You went loser?
No. Winner, loser.
Chicken.
No chicken. Yeah.
So, Michael, we're getting really close to that opening range in the NASDAQ. Opening range low, 230, 273. 273 is the opening range low.
Yeah, I started out of the gate long 34s and then covered 34s. Then I got long 31s and covered 31s. Then I got long 30s and then covered 29s. Then I got long 30s and covered 37s. Then I got short 42s and covered 49s. Because of 39s, it was down. Out of the gate. I like to build a little bit of a cushion.
Mm-hmm. Well, we're ping
I'm not sink my teeth into anything right out of the gate. But if I'm playing out of the gate, it's light and tight. Hence, I always say light and tight out of the gate.
So if it doesn't go your way in the first 30 seconds, you're looking to get out?
Yeah. Yeah, in the morning. Because the morning it's fickle.
Yes, it is.
Each his own. Some people are like, hey, it's at my level. So that's fine. I like to return to settlement play.
Yeah. Eddie, what do we have on tap for speakers?
We got a lot going on here today. I think it's
we got to be on our toes today, people.
Just about all day long.
Okay.
19 minutes, we got Waller speaking. If you're trading crude, we got one of the governors speaking from Canada. FOMC member Williams going to be speaking at 11.
Okay.
And we've got Fed Logan. Logan's run at 12:30. Let's see here. Who else do we've got? That might be it. But throughout the day, throughout the morning here,
It's a good lineup.
they're earning their cash.
Yeah, they are.
Get to work, you bums. So Fed Head Day. Oh man, here we go.
Is that what you say, Eddie, when you're driving on the Dan Ryan and roll down the window and they're working on the road?
What, Fed Head?
Yeah, the traffic here in Chicago. There's always somebody working, a crew working on on something here. It's right.
My
Every
God,
time.
man.
Mhm.
So yes, there's always somebody working on something,
Mhm.
NQ 70% short.
I confess, I got back in.
I confess, I got back in at 47s.
Yeah, I had to get something here. I mean, you're watching these markets just
I
back
know.
and forth. It's like a tennis match,
Yes, it is.
Oh man. Well, I'm done for the day.
That's all she wrote.
Robbie, hey, your loss limit?
No, I'm up a comfortable 424.
Oh, very good.
Yeah.
Why don't you lose that $4 and call it a day, if you know what I mean?
Jesus, every day, dude. Every day.
Every day.
Okay.
Every day.
All right, I'm back to scratch. I was just long 47s, covering 57s.
Be careful now. Be careful.
Yeah, light. I on that little pullback right there, I got 47s. I just covered it. Back to scratch. Hola for the day. You ever go to Aspen, go to Michola. It's a nice Mexican restaurant.
Michoacan.
Yes.
Gotta love a boss like that.
All right, hey, I need some help. We need some help in our team of traders in the chat room. What levels do you guys have? I asked him what. Yeah, I was going to ask him this.
I thought you were going to ask him who they want us to interview.
Yeah. Hey Roy, I got a picture I'm going to send you guys of my bike ride right after this. It was fun.
Hey, congratulations to Joseph King, Renden. We got Reden passing the combine. James Trade passing the combine. Michael Belt passing the combine. Swoops passed his fourth 50K yesterday. Jason Blackwell passing the 150K for the fifth time.
Wow.
Nice.
Who else?
Respect.
Passed my fourth comment through Karma Twist. Congratulations. That's good stuff. I like seeing that.
Absolutely.
Yeah. Oh yeah, 100%. Even if you bust it out multiple times, I mean, at least you're not busting out of $90,000 like I did when I first started trading. Real money.
Yeah.
It bust out of an account. You have to reset. I always say slow it the hell down. I mean, we got some folks reset way too much. We have to reach out to them. All right, this is not instilling good behavior here. So
how many other firms would do that? Hey, slow down spending.
No, they don't. They put a 96% discount. They sell 20 more.
So whack.
Mm-hmm.
Mr. Romanowski looking to request my first payout today. Congratulations.
Well done.
Hell yeah.
You're buying lunch tomorrow.
Polska. Well done.
Yeah,
Nice.
That's good. It's really cool when you like all that work and hard work that you do, and then you're paying yourself, and you get that money in the bank account, and it's real, and you can spend it and have fun with it or use it whatever the way you want to, and it all comes full circle. It's like, man, this is. I tell you, that's how it was, for a lot of us.
Yeah. I can do this. I belong.
I can exactly.
Yeah.
I can do this.
Cashing that first check is one hell of a feeling.
Hey, going back to blowing out of accounts, let's put a poll in here really quickly. On TopStep X, do you want a feature that doesn't allow you after X amount of resets to trade anymore for the day? I want to know, because if you're like, hey, no, I'm a man of free will. Give me my freedom. Or if it's one of those, be like, yeah, I need you guys to help me out. This would be great.
It's pretty cool. We're gonna have the traders build this thing with us.
We're gonna have you guys 100%.
Yeah.
You talk about a trading buddy, and Sir Attenborough has a comment for us here.
Only a foolish zebra travels alone. There is always safety in numbers. Get yourself a reliable trading buddy.
Whoa.
Yeah, thank you. Thank you.
You pay him to record that, Eddie? How'd you do that?
I know him. He did that for us. Richard Attenborough. My God, man.
I see Anne-Marie is in the chat.
Yes.
Answered a comment. She said she'd be happy to do a session sometime about trading oil futures using option strike prices. So let's talk, Anne-Marie. Let's make it happen.
Man, where else you get stuff like this?
Anne-Marie.
Hey, you can read a book on it.
There's an all-star.
Boring.
I remember it when I first started, not when I first started, when I would say, hey, I'm a trader, blah, blah, blah. People are like, ooh, I want to get into that. And they're like, how should I get started? What book should I get? I'm like, what book should you get? No, wrong. All right, starting off wrong. Get in the cockpit, put it on simulation mode, and see if you can fly the 747, land it, and do a barrel roll. All this stuff, and then you're ready to put 200 people at the back of the airplane, aka get your personal brokerage account, money deposited, and trade. Simulator to me is the most important thing. Experiential learning.
It helps.
Screen time. Yeah. And then having a trading buddy.
I mean, I'm not gonna lie, I went to school for 4.5 years to, figure out economics and stuff. So I guess I did do some reading going into it, but yeah.
That wasn't trading. I got an economics degree. Yeah, that wasn't.
Yeah, the supply and demand stuff helps.
I do too. Where'd you get the last half year from?
It was just 4.5.
Okay.
Just can't. Yeah, it's just 4. It was supposed to be 5, but
Super
parents
common.
were like, no. Parents were like,
Okay.
no. Finish, wrap this up. I'm like, all right.
Ixnay. Congratulations, Brianna. Just passed another 50K combine.
Mm-hmm.
So, the thing is, if you get funded and you blow the account, you do something that you lose the account.
Liam.
I tell you, you've been there, you've done that, you know how to get back to that.
Mm-hmm.
And don't wait. You're in a groove. You just had a bad time. You hit some bad trades. But Brianna coming back here and passing that 50K combine once again. So that's cool.
Nice.
The door's always open here at Top Step. Always. Just remember that.
Opportunity. Good performance equals great opportunity. Or great performance equals good opportunity. Topstep X. When will it be available? We're adding like 100 to 200 people a day on it right now.
Are we really?
Oh yeah. First feedback was it's perfect.
Michael, back to the opening range.
Back to the opening range.
Back to the opening range.
That tells you what?
If the opening range remains the high, this is a sweet spot
To buy a pullback?
to sell. Yeah, for a short.
Okay.
I mean,
For a short.
you can limit the risk here. If it takes out the high of the opening range, you're out.
When you say cheap trade, is this what you mean?
Yes. High of the opening range,
Yeah.
287.
287. Okay. 287. Why did I have that written down? Like 275. Oh,
That's the low of the opening range.
Oh, got it. Okay. You guys writing down your numbers?
Always.
No,
Post-it
you guys
notes,
here,
baby.
Now here goes gold.
I got envelopes.
Whatever it
Why
takes.
no, I don't know why. I got a shit ton of them over there because every time I come back to Chicago, our cleaning folks leave all the stuff in my closet, and I have to go through Georgia Department of Revenue.
Here
Michael
it goes.
Patak in my name. So Georgia.
What the hell are you doing in Georgia?
I don't know. We have things all over.
S&P is not back to the opening range yet.
Not. Eddie, NASDAQ might be leading now.
There, it just took out the high in the NASDAQ.
Yeah, it
Yeah, I
did.
see a new high there, Nasdaq.
So, Michael, you're seeing that rejection of value from yesterday that went into it, couldn't hold inside of it. Now you're seeing the direction.
Hey, John, Patricia wants to know, how do you determine your levels?
Market profile information, technical analysis, tea leaves, and turkey bones.
Turkey.
Can't use chicken bones anymore.
No, you can't. New lows in crude knocking on that door, 78.43.
Unreal.
And getting a little deeper here in gold. Gold trying to get back to where it was, 1966.
Still ripping higher. Those longs, man.
I mean, that year was a good year.
Hey, Hogue, real quick, who are you talking about that lived in 3 different centuries in opening call?
My grandmother, my dad's mom.
That's insane.
Yeah.
What do you mean lived in 3
Born in
Three centuries,
February,
Michael. Wrap your head around that.
born in February of
What's that mean?
1899 and died in January of 2001.
That's wild.
It's a rarity.
Holy bananas.
Think of the changes in the world that happened in her
Seriously.
lifetime.
Oh, my
The
God.
internet.
The first car.
The first car, I guess we go way before the internet.
You know, when she was a little girl, they had an outhouse.
That's insane.
Well, yes, they did. Plumbing. How about that?
Right?
Running water,
Let's get the basics.
Basic infrastructure.
And she was sharp as a tack till the end. I mean,
That's how I like to be. I mean,
talking about
right?
boys she dated in high school when she was 100 years old.
Grandma, pump the
She's
brakes.
dating boys in high school when she's 100. Boy,
What you calling it? What you calling it?
Grandma.
She was a cougar.
That'd be awesome if she was calling it swipe right back then.
Drove a Corvette. Yeah. Drove a
Hey,
Corvette.
Patak, big. Oh, that just got taken out. 150 lot on the Nasdaq. I just caught 15 300s on the bid.
Damn trader. Thanks for telling me I got to get a shot.
Joe
You're
Trinian
right,
said,
yeah.
I had an outhouse as a kid. How old are you, Joe?
Well, I
Well,
know
you
what
know, I
price is
tell you,
that.
some places just do
Yes.
have that outhouse.
Andre, what price?
15 300. The 300s traded on the 150 times on the bid.
They came in
NASDAQ?
on the bid?
Yes.
Yeah. So when it's
NASDAQ
trading
or-
Nasdaq.
Yes,
Yes.
yes.
300s.
when it's trading 03s, the 300s, a bid came in. So it was on the
It
opposite.
was a resting bid. It was a resting bid, like 6 prices below. Yeah. I never.
Andre,
catch
you
that. I never-
short? You got a position?
Nothing. I'm flat. I've never catch that shit though, so
Okay.
it just stuck out like a thumb.
That's weird. They don't do that. So when it was trading 03s, they popped in a $100 bid.
15 300s, correct.
The liquidity is on the upside in the S&Ps. I'm not selling this. I want to sell this opening range here in the S&Ps, but there's liquidity above.
Dan, you the man, damn trader. Cool. So $100 just got smoked so far, right?
That's what I saw. They definitely traded.
I
through.
don't. I don't see them trying. They usually are on the pivot areas where it pivots. They're trying to catch a.
What do you mean by pivot, Michael?
Well, I mean areas that the market comes up to, pauses and changes direction. That's usually where the big $100 is. So it's odd. There was three handles off the high, and then they came
Lacey
in.
says hi.
Hey, what's up, Lacey?
There was a question in the chat about what's a resting order? Resting
saw it,
order
yeah.
is in trading is a passive, unfilled order waiting in the order book until it matches with the market order to execute. So that's we had a lot of resting orders once we were on the trading floor. John, you held a order deck, right?
Yep.
And then sometimes these, I mean, they would be thick. I mean,
Oh, yeah.
you'd have 100 resting orders above and below the market. And as the market
like
moved,
this.
peeling off.
Let me see. What we
Yeah,
got.
exactly. You'd be
Yeah.
peeling off. Let's say the market jumped like 10 ticks, 10, 15 ticks. You'd have to go through that deck and pull out and say, add them together.
Yes.
There's 7 orders here. We moved 10 ticks. Hey, you know what? Buy 27.
Right.
And the filling broker would buy the 27 and he'd give him the paper. He'd fill it out. And that was, we used to have the order deck holders in the pit. We had our arbitrage, our clerks, our filling brokers. I mean, there was each. John, you had a little team going on,
dude. It was crazy. I mean, you've got hundreds of paper orders in your hand. If the market moves quickly, you've got set 20, 30 orders that you have to remember and fill, and then behind you, you've got 3 clerks going buy 10, sell 50. Even on 25,
37 bids out, cancel
on a stop down below, sell 500 at 27 even. I mean,
what though?
Firing at you,
Johnny. They'd get back at you when they give you a card and say, "Add these up quick."
Dude, the math was a pain.
Oh my God, I hated math.
The math was a pain, dude.
Well, you gotta group things in tens.
Yes, you do.
Oh yeah, that was the way to do it.
We got an order on unemployment. A Fed meeting. A guy came to us and says, I want to sell 2,000 at this price, and you guys are held. Do not let price go through that until you are completed. So I looked at my partner and he says, you take 1,000, I'll take 1,000. So we tipped off the exchange a little bit. We looked at the pulpit and said, hey, we're working fucking size at 2 even. Keep your eyes on us. Well, the FOMC comes out, minis go 15 handles through our offer, and we're going 1,000 and even, 1,000 and even. So he's doing 1,000, I'm doing 1,000, and I'm getting hit 10 and 20 at a time. 10, 20, 30, 100, 100. And we're just writing down numbers. I got 500 and even. I'm 10, 15, 72. 18.
How do you order in the spoos? There's like a 300 lot of 320s. I think I saw pop in there too.
That's the liquidity that I avoided shorting at the opening range high. Okay. There's liquidity above 9/4. There's 330. Kind of runs out after that. But we'll see.
Sorry, so who's keeping your count? Who's keeping your count? I
got 7 cards with nothing but numbers that you can barely read on them. And you gotta go to my clerk. I say, how many do I have?
Oh my God, yeah. Add them up. Come on.
What'd your clerk say?
I'm thinking I got about 150 left, and Joey Borsellino is going, buy them all. I'm like, 150. So he takes them and he gets out of them on the minis because you're buying them at even, and the minis are like
10
8 handles higher bid.
Yep.
10 lots.
8 handles higher
thing
bid.
Is, John's offering 1,000 over there, and when I was at First Chicago, I'd pick up that phone real quick. Give me a bid.
Well, hold on. Let's explain what it is, though, guys. 1,000 lot is 5,000 minis, right?
5,000.
That's a huge order.
Right. That's massive.
So right now, what's the biggest offer right now? The markets, if you're looking deep,
500. That's 100 lot in the bigs.
So if you're in the minis right now, and you see a 500 lot, that is 100 of what John was just saying.
Right.
So you're like. Nobody here is taking on 500. Most people take on 15. Yeah, 15 is a 3 lot in the pit, right?
Yes.
Yeah,
it's multiples of 5.
So when you see guys on here banging out, Kyle comes on here banging out 15 lots, but he does it in the NASDAQ. In the S&P, it's a 3 lot.
Yeah,
just goes to show the size.
Considering John, on the floor, 15 lot trader, that would be a bigger trader.
That's a big trader.
Local. Yeah.
That's somebody
the locals, 1 to 5 usually.
1 to 5. 1 to 5, yeah, Eddie. Yep. And you can make a lot of money, as you guys know, with 1 to 5.
100%.
Mm-hmm.
100%. And you're standing there filling these orders, knowing that if you screw something up, if your account is off, and price moves in a certain direction, you're getting whacked. You're getting killed. But I was within about 3 contracts when we added everything up. I had 3 contracts and price was lower. So basically, I just had to give the customer the difference.
Yeah, that's and that's pretty good.
Hell yeah, that's really good.
Yeah.
Well, order filling is never an exact science.
No. Customers.
I remember during the 2008 financial October 2008. Crazy. You remember Johnny Zawaski, Eddie, the ZJ, and then his group? There's one just like that scenario. Johnny's like 80 bid, and he screams up to the pit reporter, "Nothing below 80 bid."
Right.
He had like, pretty much saying, "You are not printing a damn number below 80 because I'm holding this market up, and my customer says I have to fill." And he had thousands, like a couple thousand, same kind of deal.
Yeah.
And then you're sitting there, and you're on the screen, and you're looking at your screen, and it's 80 bid, and it goes 78 bid, 100, and then you go fill it up, 100, fill it. And then when I say fill it, you're selling him 100, and right away you do 200 on the screen at 78. So you're making two ticks.
Right.
And by the time you do a couple hundred over there, you're up $5,000.
Right.
And the next thing you're like 100, and then he's like filled. Market falls, but typically it'd fall and then firm up. They're always pretty damn right on these big orders.
Yeah, there were some people printing money working the arb against the pit.
Yep.
This one guy, PXG, when I had that 1,000 lot, and I'm looking at the minis, and they're 10 handles higher than our offer. So I look at this guy, I'm like 500. He looked at me, he goes. And this guy was a huge trader. I mean, just printing money. And I'm like, you weasel.
He just killed it.
Yeah, that was soft language.
Yeah,
that was.
Oh, it certainly was
compliment.
soft language.
You felt really good when you saw that order coming in there and you got in front of it. Yes, because like if you saw the order coming in and it was 80 bid and it was trading 77s, you can see it. You would hit the screen all the way up to 80s, which means you're just going market order. So you're getting 77, 78, 79, and you push up there and then it'd be firm. And then the pit would be firm at 80 bid. And then you're like, if this thing runs, I'm sitting on big size. And those would be lucky ones.
Right. 90 bid it even as a floor question on the open. As a broker, if you had an offsetting order, say 700 to buy and 500 to sell, MOO, which would be market on open. Would you cross the 5 inside your firm, or did they have to be traded with locals?
They had to be executed in the pit.
Right.
Yes.
You had to put them out there.
Yeah.
But sometimes I know when we'd have something, not that size, but something bigger or something as big, maybe. You'd give one order to one of your filling brokers, and you'd give the other to the other filling broker. You
did this with
offer. You'd have to offer or bid them.
Right.
You got to let the pit know what you got. But a lot of times, they'd be sold. And you'd have that order done. As long as it's in the opening range, price wise. You're safe with that. But
right,
that happened a lot.
I also have something to share that connects this to Topstep. Hoop sent us a second picture yesterday.
Oh, Hoop, are you with us today?
Oh yeah.
There's an old Topstep card.
Look at that.
You remember those, Michael?
Oh yeah.
I still got a stack of those.
50 lots, sold 30, sold 20. That's how you usually write it up. So I bought 50 for PTK.
I
talked it to sold it to Marty. MRX is Marty. CDR was Cedar. Was
Cedar.
Chris Reuter. Yeah. Cool cat. Both of them cool cats. I went traveling. Marty.
Yep.
When Marty Marty got married, and then he bought his honeymoon package at the exact same time he got married. And then he got divorced 3 months later. And guess who he took on his honeymoon package a year later? Me. We went to Vietnam, Cambodia, and Thailand. Yeah, it was like he's like, it's all on me. Let's go for like 3 weeks. I'm like, hell yeah, let's go.
That's sick.
When's the last time you talked to Marty?
It's been a while. It's been like years.
We got to get hold of him.
Oh yeah, Opie. I talked to Opie. I haven't talked to Cedar in a while.
Let's get Opie on here,
right?
So
he's got pretty foul mouth.
Here's one of my trading cards when I was at the Mid-Am. My badge was HJT. This was
cool.
This was 1989.
Wow.
And then here's one of my filling cards from the S&Ps.
Yup.
And you'd fill it out, and then you'd tear the dupe off,
Yes, there it
You give
is.
the dupe to your clerk so that they can go check the trade, and you send this one to the clearing firm.
And then this card is the one they used to give away for free. We
Yep.
used to have these were free, and I used to take them by the stack. You'd have your buy side, buyers,
Buy side,
and then you'd have your sell side.
sellers.
And I mean, these were rarely used. I mean, every local trader had their own.
They were used for notes.
Yeah,
Here's
notes, grocery lists.
I still keep my cards in my
Throwing them around.
backpack. Yeah, I still keep my card in my backpack. There's a PTK. There's my account number if anybody wants to know it.
It's no good now. So
It's not that account's not open anymore.
and
Now,
then
you
the
notice
alphabet
that-
right below you were the brackets. You would circle that letter, whatever bracket it was.
And you notice
Yeah,
the buys and sells are on the same side. They used to have buys on one side, sells on the other, but for bookkeeping and accounting purposes, they put them on both sides so they knew what trade you did first, whether you bought it or sold it.
Right.
So those
I-
two would be
I-
very important. Very important.
Here's the notes I'd leave myself. I don't even know why I'd have this.
Better to beg for forgiveness than ask permission. 100%.
I don't-
Epitaph, Mike.
It had nothing to do with trading. I just think I'd be like, Michael, you think it's the right thing, then you do it.
Oh boy.
I had a good moral compass, Andre.
Yes, I'd say so.
Yeah, at least I thought I did. I did.
What's the worst thing you've ever done? I love that question.
I ate
No, stop. No, we're not. We're not. All right, looks like we might be take a rip and higher here.
Mr. Grissom, good morning.
Yeah, those pit stories are cool, by the way, guys. I was just a lowly clerk, but watching you guys in action, that was pretty sweet.
Hey, Gear, Topstep Museum. I go in about 15 minutes. In about 15 minutes, I'm going to cut out of here, and I'm going to go talk to the owner of the CBOT building, the management company, because they just got a big grant, or whatever it's called, from the city of Chicago to put a museum in the Chicago Board of Trade, right next to Sirius, guys.
That's going to be cool.
Yeah, and then we're talking, Lacey. We're talking to them about putting a Topstep office in the same room as the museum, and this is all of with huge 15 feet by 15 feet windows that you walk by, so ground level. So that's where I'm going. If I can get this deal done, you're going to see like CNBC Fast Markets or ESPN does this, where you see people walk in the background. We'll be able to do that with this show.
So there's going to be like a glass separating the broadcast from the public.
Yes.
Yeah, as long as nobody breaks it.
As long as you guys heard about
Johnny,
the story about the Eurodollar
Predator.
pit and the visitors gallery. Yes,
What happened?
Right? Maybe I shouldn't bring it up, but that's okay. I'll keep it to myself.
If you think you shouldn't, sit on it for tomorrow and then see if you want to.
Okay, I'll sit on it until tomorrow.
They call that sleep.
But let's just put it this way: it's security was quick on escorting those two women out of there.
Oh,
Okay,
Are you talking about the old floor, Eddie?
Nah, the old floor. Well, yeah, the CME.
Yeah, it was the T-bill pit. Yeah, yeah. Well, it probably happened a lot. I don't know, but
John, you told me the old floor they used to smoke cigars and cigarettes around all that paper, correct?
yeah. There was
On the
the
floor.
old floor on Jackson. There was a yellow tape line around the perimeter of it, and if you were on the other side of it, you could smoke.
gosh.
I actually have pictures from the old days of guys actually smoking in the pit. Here's kind of a funny story. Jerry Kane was a broker in, I think, the corn pit, and his spot was right next to the pulpit, which is where the exchange goes, where you tell everybody, hey, even traded or quarter traded, whatever. And he used to smoke a pipe in the pit. Well, when he wasn't smoking his pipe, he would put it on the pulpit. Well, it would sit there and smolder, and the people that worked for the exchange would just smoke. You know, they get that smell, and they got tired of it, so they took his pipe and stuck it in his trading jacket pocket. Well, they ended up lighting him on fire. His jacket lit up because they put this burning pipe in his pocket, and so I think he just kind of had to rip his jacket off and then start screaming at the exchange people like, "What'd you do?" But yeah, they used to smoke in the pit. Here, I'm going to step away for a second. I got a big picture I want to show you, and it'll be pretty cool. Hang on one second.
All right. While he's doing that, what do we got happening here in these markets? Tilt is pretty much around 50-50, so no real lean going that way. Markets are range bound for the time being.
I bought the pullback here, 85s, 285 evens.
Playing the rip.
Yeah, I'll play in the dip. Playing the dip. It's showing a trend. It's trying to trend. Yeah, again.
To the upside, right?
Does it fail? Yeah. You can roll over to my screen if you guys want.
You guys got any P&L today?
Nothing. I'm sitting on my hands right now.
Nothing, huh?
No chicken.
Yo, Eddie,
no
you're 420, right?
A little more. 420, yeah. Actually, you're 424.
424.
424.
Topstep TV is the best, Tamika. Thank you.
I'm done for the day. I'm not going to play it anymore.
That's awesome.
Here you go.
Really quick, can we put a poll in there from this point? Hold on right now. From this point right now, guys, do you guys think it's going to trend higher or lower from the 15,300 level? 15,300.
Let me see that picture, Hogue. That was cool.
Yeah, Hogue, can we see that again? Sorry.
Wow.
See, they sort of pushed that. Now, in the CME, they had a smoking lounge for the traders and the clerks. They had like a smoking room for the clerks. But I remember an old cub of mine, one of my favorites, Larry Bittner. There's a lot of sports figures that ended up at the CME trading. And I was going in there to check with somebody or something. All of a sudden I see BITT was his badge. And I look up and I look at the badge, it says Larry Bittner. I'm like, holy crap, that was my childhood hero. And he's over there puffing a smoke, talking with trading cards. I'm like, wow. That was pretty exciting. But we had that smoking lounge on the floor for the brokers. And then you'd go upstairs and there was a smoking room for the clerks.
There's just a comment in there in chat that just made me laugh. Here, check this out. Here's the trading floor before the price quote boards. See those people up there on the catwalk?
Wow.
They're chalking the prices
on the catwalk.
On the
I've never seen that before.
The catwalk.
Yeah. Pretty robust pit there, though, isn't it?
A lot of
and this is probably in the late 50s, early 60s.
It covered those 85s.
Eddie Hogue, MP, what markets did you guys mainly trade in? John was S&Ps. I did S&Ps and Dow. Michael did Dow. Anything else, guys?
I was a clerk in the beans.
Beans in the teens.
When it was slow, this is what they did. This is what they did on the floor when it was slow.
You got a lot of cool pictures there. Those are from your dad?
Yeah.
Yeah, those are sweet.
They would do that. John, remember they would do that on Christmas Eve, where they'd go around and have the deck of cards for big money. We'd have like a half a day on Christmas Eve. And there was a game they played. I never touched it because the stakes were too high.
Bag of fives, bag of hundreds.
We did that. You put your name on a 100 or a 50 or a 20 or a 5.
Hey guys, let's jump back into S&Ps and NASDAQ because we're trying to push new highs.
They're trying. They're knocking on the doors, you say.
72% of people are saying, 70% of people
There's liquidity above. I'm not fighting it.
What does that mean, John? There's liquidity above. That means the market will seek liquidity, right?
Yeah, so you see up here at 989 and a quarter, there's 400 offered in the S&Ps.
Yes.
You can't see it because we're on that, but there's it kind of runs out up above that. So I'm kind of interested in seeing what happens if we look at yesterday's high in the S&Ps. I mean, we're already above that in the NASDAQ. So I'm looking at yesterday's high as an interesting opportunity because last week's high and weekly kickoff high are up in that area. But in the NASDAQ, it's a little bit of a different story here. You know, it's been basically, it may not seem like it, but it's ballistic to the upside. I mean, we've got one time framing going on. We rejected value from yesterday. I haven't been watching to see if there's liquidity above, but something tells me that there probably is. And, you know, our next target really is 15,427 weekly kickoff high. Take a look at this. You see this trend line here? I mean, this trend line goes, well, let's look at it on the daily.
Yeah.
This trend line goes way back. We'll go back into the way back machine.
I'll look at that.
There it is. There it is. 1, 2, 3, 4, 5 points of contact. If we accept above it.
And now it's at the 100. Right?
The 100, right, on the daily, correct. Yeah, that the 100 on the daily is at 15,312.75.
15,312. What about in the S&Ps? What was that that big order in the S&Ps you saw there, John?
Yeah, that was...
Dude, John's on point
312.
89 quarter. There's 400 offered there. And that's kind of a weird level for liquidity because the liquidity like this, you tends to happen on like the evens and the fives, even handles and 5 handles.
Okay, 400 that.
Makes me think it's probably not there, actually.
Yeah,
but I'm not going to fight it because, I mean, obviously, it's a price point for traders to bring price to.
I like shorts up here. I mean, we're at that 12, but tilt's a little strong to the bias, to the long bias.
So I mean, listen, and the NASDAQ has been presenting as high as stronger for months. I mean, look at that same trend line on the S&Ps is all the way up here.
Yeah, that's the daily. Okay.
Yes, that's the daily.
Coming up right to it. All right. Man, John, you're on point today.
Hey, Johnny, JP is asking, is a break and retest of the opening range a good strategy on a trend day like NASDAQ? Break and retest on the opening range.
So, well, I mean, initially the opening range was at the high of the session, right? So when that happens, you get a big move to the downside. When the market comes back up, it gives you a cheap short. This one didn't work. So now, with the market is one time framing in multiple time frames. The daily, it's one time framing on the 30-minute chart. So a move back to that starting level, it's not a bad idea. And we can see that the B period traded to the low of the opening range here. This little carrot here is the first price of the day.
Huh.
So this was an interesting spot. Not only that, there's a low volume node below it.
Amazing.
So we should have been in the pit with a cigarette hanging out of our mouth, buying it down there, apparently. But you never know. I mean, that's the hard part is everything's easy in hindsight.
15,298.
You still got that offer there at 93 quarter. That's just a weird level. Just a weird level. And S&Ps are still, I mean, we're wrestling with weekly kickoff high, last week's high. All of this is important. That's why I'm kind of hoping that we get a chance to see this liquidity up here, see if there's any liquidity above it, and maybe look for an opportunity for a short here because we're looking for this market to take a break. That move to the upside last week, it was like 6%. That's a big move.
That's a lot.
Yeah, but there wasn't really any volume or open interest behind it, which makes me think it's a little bit hollow. Maybe we need to just kind of digest here, even up inventory, and then get our next move to the upside.
Are we now that we're looking back on last week and with the low volume, are we thinking that was more of just like a grinding short squeeze? Because like remember the delta divergence and Fred Decker pointed it out, and the shorts were growing, but
Right.
Okay.
Right. Yeah. So that delta divergence on Thursday, which I think is the day, the delta divergence on Thursday, we lost 2,400 in open interest. That was more of a short covering event than any new longs coming in. Well, if the auction is going to do well, it needs new business, and that takes out old business. So that's one of the reasons that I feel like this rally was a little bit hollow. I was a doubter all week, even though I wore my rally sweater all week. I didn't fight it. I traded what we saw. I made money last week, but it wasn't the week that I was looking for. And I don't get to choose that. So you got to look at the information you have, the market generated information that you're being given, and make good choices off of that.
It's called you're being agile. That's pretty good.
Well, yes. Be humble, grateful, creative, and centered. Creative is the flexibility part.
There you go. Hey, we got a couple minutes here before half past the monkey's ass, and we've got let's do hot streaks. We got hot streaks here. Let's see what's going on in hot streaks.
Ooh,
the people in the chat are cracking me up today.
Yeah, it's been on fire. What do we got here?
All right, funded hot streaks. 17 days now. We did. What was the reason we pulled Massimo Milano?
I can explain these since I've seen the accounts. So temporarily, I've taken Massimiliano off. His live account is now set up. So once he trades, I'll bring him back. So that 26 days intact. Nice. Some other notes here. Daniil, who we talked about yesterday, who had 14 straight of $15,000. Unfortunately, that streak has been put to an end. So congrats on that. Blake B was at 14 days. He also dropped. Oh no, Blake B's there. Danielle dropped. And then we have Andrew M, 14 for 9,000 is the double hot streak.
That a boy
so far. So that's the update there.
So Massimiliano went live.
Yes, and I think as of yesterday, the account is set up.
All right, welcome to the big leagues.
We will get an update there.
So good stuff. And then, congratulations to those still on and those that had some decent runs. Good job.
All right, markets are ripping here. Oh, boy.
Yeah.
Okay.
We have a speaker. What happened?
Well,
no.
Oh, okay.
So we got through that initial
took forever
liquidity.
Wow.
92, 93. I mean, there's some liquidity right above here. I mean, we're looking at 200, the S&Ps, 30. What's happening here? What's happening here?
Yeah. Did that ass high? Nope. 89 quarters.
I don't know what's happening here.
I'm confused too.
Right.
I'm confused what these paper orders are doing.
I got stuck on that 12. I sold the 12s and the 15s down there. Just gonna chill.
All right, let me go back to the 30-minute here. All right. So here's yesterday's high. Here's where we are up against last week's high. I'm not stepping in front of it. We don't have any divergence, but we're only 1,900 positive.
So, damn, I missed the move. Missed the move.
91. I don't know. This looks cheap. I'm shorting it.
Yeah, I'm feeling that too.
I'm with you. I was in a short, but I'm also those 12s. I thought we'd be back under the three handle.
I'm probably just going to get whacked on this, but
I'm short from 91, guys. This is my trade for
We're
the
all
day.
short right now.
Are we?
We're all short. Right
Someone get long out there.
right. Somebody should.
I know.
Right?
Somebody should fade this. There you go, guys. Yeah, 3 people. You got a bias here on the Top Step team of everybody short. If you'd like to learn more about fading somebody, then get long right now.
Fade me.
Well, Command says there's a 460 block on the ES at 44 even.
Oh, I believe that. That's a fat round number.
And it looks like it hit the brakes there.
Where are you short from, Hogue?
Thanks, Command.
90-50. Now it's just kind of it's holding above yesterday's high. I'm short in bad trade location against the weekly kickoff high.
I'm out. All right, I gotta get out of here.
Yeah, I'm
Bullshit.
got
Let me get
that
it.
was a shitty trade.
No, I'm taking a divvy this time. Taking the bite
right.
again.
All right, I'm flat. That was stupid.
All right, boys, we'll have good meetings and appointments and
All
everything.
right, I might jump back on this afternoon when I'm back.
We'll be here. We'll be
All
here.
right, keep trading well. That was fun. That was good energy this morning. The chat was awesome.
Yeah, we'll see you guys. Take care. We'll keep you updated on this Topstep TV studio location.
We'll
street
rally.
level.
I'll be damned. All right, bye guys.
Take some pictures, Mike.
Yeah.
I will. No, I will. Good call.
Okay.
Good call.
Cool.
All right, bye guys.
See you later.
Look at this rally. Unreal.
Take care. Mountain Rock. Yes, I am. Question is, anyone using Topstep X?
All right. So we're stopped out on that one. Down $154. Nothing. All right. Here's weekly kickoff high now.
Epic Zone. The second time he asked, I thought I answered this question for you. He says, hey, Hogue, Eddie, how does a stop loss work when at pits? I'm not really understanding that. I mean, if you're talking about a stop loss per trader, per local.
Well, in the pit?
In the pits, I mean, it's completely up to them, when they want to stop. I don't know, stop loss works in the pit.
Well, I mean, the stop loss was an order just like any other order, a resting order. So I'm short at the weekly kickoff high right now, 43.94, and I think I'm crazy, but I'm going to take it just because I want to see what happens. Risking 4 points. So a stop loss in the market was similar to it was similar to an offer. There was a buy order, however, above the market. So, if price was moving higher, the broker would kind of go through his deck. Okay, I got a 10 lot stop here at 95 even. Once 95 evens trade, somebody calls in, hey, 95 even trade, that order, you have to work the order. If it's a stop market, you find the next offer and you buy 10. If it's a stop limit, you bid for it, but you can only pay that price. Doesn't mean that it's going to get filled. So 95 even on 10, 95 even on 10. If price continues, it's not deserved. It doesn't deserve a fill.
Right.
So if you're a 95 stop and you pay 96 on a buy stop market, and there's no downticks, that's the fill. And sometimes there were, some pretty big gaps between bids and offers. So there was sometimes a lot of slippage in the pit, for sure. Not that there isn't a lot of slippage in screen trading either.
And then you get an argument with the phone clerk. They need time and sales, and then you have to pull somebody out of the pit.
Right.
Go get time and sales for us.
Yeah, and if you messed it up, you had to write them a check.
Yeah, right. Whatever the difference was, basically, Hoagie's still short. Let's see.
94. Yep.
94. Yeah, still short. Whoops. It's a graveyard.
Yeah, this is not going well. Yeah, we'll see what happens. The initial range is not the same as the opening range. Seeing that question? Opening range to me is the first minute of trade. The initial balance is the first hour of trade. So like here in the S&Ps on this profile, they're both represented. The gold bar here is the first minute. That's the opening range. The initial balance is represented by this dark blue line. It's the first hour of trade. So I think
go ahead.
Well, I think I'm a little crazy because we opened in range. We're now rejecting value and range to the upside here. But this is an important level, 94. Everything is a zone. I don't think we've left the zone of the 94 weekly kickoff level. So we're going to just see what happens. I'm relatively confident I'm going to get stopped out on this, but I'm okay with that. It's all right. We will be just fine. Not going to freak out.
No. Well, in crude, just we got a double bottom here on my 30-minute candlestick. Anne-Marie Band says she posted the crude in the energies room. Any bounces are likely to sell. So if you are not a member of our, I believe it's Anne-Marie, you're talking about the Discord energies room.
Discord
right?
channel, yeah, probably, right? It's good to have Anne-Marie here.
Yeah, maybe can we get her on? We got.
Oh yeah, I'm going to send her an email today and see if she would come on Power Players and talk about option open interest in at certain option strikes, attract price and futures.
Daniel's asking you, Johnny, does the poor low from yesterday in ES mean anything today?
It is a poor low, and it put in a bunch of poor lows on the downside yesterday, didn't it? It just kept putting in poor lows. It's going to mean something at some point, if not today, at some point.
At some point. Now be careful.
Yes. It's kind of an unfinished downside auction, but right now the auction seems to be doing pretty well to the upside. So, and the overnight low is right in that area as well. It's a kind of a visual area, perhaps a structural weakness, but when it becomes important is when it becomes important. I know Anne-Marie, when we were looking for levels, Anne-Marie said 43.62 is the floor in the S&Ps, and look where that is. That's just below that week low, and Friday's opening range, which was the low of the session. Buyers came in at that level, so it makes sense.
Right. Well, some of the comments here in the chat, Josh says he loves our stories from the pit, from the floor. I don't know about you, John. I like telling them. I mean, because it was such a different atmosphere, lifestyle, career.
Yeah.
I mean, it was you had that hot coal under your ass as soon as you walked on the floor until you walked off the floor.
So I have one more picture to show you guys if you want to see it.
Of course, man.
You can't see his whole face, but this guy right here. Where is he? This guy right there.
Okay. That's your dad?
That's Dad.
That's Dad?
Yep.
One guy on the right looks like Mr. Whiffle from Charlotte.
Late 50s, early 60s. Yeah, there were a lot of old guys there.
Look at that. Your dad looks like he's gonna offer something, and
he's gonna bid or offer for something there.
he did
Arms
what
are getting
John's
ready
doing.
to go.
Yep, swinging out. And this old guy with the glasses looks like he's like a 3-bid or something.
Yeah.
3-bid on 4. 3-bid on 4, you little
buy 3 or do something. I don't know. Because that's not really a price at the Board of Trade. You know, it's a even quarter, half, 3/4, and even. Of course, back then they may have been trading in eighths. Who knows?
Maybe. All right. The next person that mentions fire drill in the chat is getting booted. Yes. And for those that are wondering about this Top Step X that did not get the invite, like Michael said earlier, we're opening up about 100 to 200 a day. So be patient. Be patient. That's what, you know.
You're saying you also trade in eighths.
Eighths of.
Somebody's got their chat name is Eddie's Bong.
Yeah, no, I've been talking to my bong all morning. And then one of the questions was, you guys ever toke up before getting on the floor? That would be like a bozo no. I mean, the thing is, you've got to be 100% focused. Just like we come here and trade as we come here as traders. You don't want to screw anything up. You don't want to mess anything up. You had to be 100%. And then maybe afterwards, you'd go and get a drink or so. Some of those guys, though, I mean, series opened up at what, 8 o'clock in the morning or something?
Oh, yeah.
I mean, you could do a few drinks, get you going, kick you in the butt. But wake and bake, I never did it. My job was too important.
I did that once when I was a runner.
Oh, runner, yeah. I
never did it again. I thought everybody knew I was. It was crazy. All right, I just got out of that position. There's just too much liquidity showing above here.
Okay.
So we cut our loss on that one.
Oh, we got some more in the newer lows here in the crude, 78.26 last. God, that NASDAQ. My God.
Down 296 now. Mere bag of shells.
A pocket full of shells.
So yeah, I found all these old pictures in my parents' basement.
Those are really cool. Those are pictures you probably will never see outside of what
anywhere. Yeah. I just can't seem to get rid of them. My wife's like, "What do you want all those pictures for?"
No. You know what? You bring them to. We get that broadcast office that Mike's talking about. I think that would be fantastic. That would be it.
Yeah. Then we're not working from home anymore, Eddie.
That's right. That's right.
It's all right. It'd be good to see people.
Yeah.
All right. So here we are, man. You and me, and the world.
You and me. There's a song there, isn't it? Like the Carpenters.
Me and you and a dog named
Karen
Boo.
Carpenter for me, John.
I can't do that. Karen Carpenter has one of the most beautiful voices ever.
Yeah, she did. Yeah, definitely. And she played a good set of drums too.
Yes, she did. Yeah, she played all the drums on all their studio albums, and quite a bit of it live too while she was singing. To gift.
Yes. Hogue, JP's asking, I think the initial balance of NASDAQ is big. Do you agree? But this is common or expected on a trend day.
Yeah, it is relatively large. much bigger than yesterday. So what is happening is requiring a lot more energy to extend outside of the initial balance than the initial balance extension we saw yesterday. This didn't take much. This is taking a lot more energy. This is initiative activity. This is people buying it because, number one, they're stuck short, or people buying it because they believe price is moving higher. We'll, of course, know more about that tomorrow morning when we see the open interest.
Yeah. Let's see here. We've got Jack's got something for us here. James and Jack behind the curtain here.
Yeah, I don't want to leave you guys out to dry right now. And Andre bailing for his appointment.
It's okay.
Yeah, but today's the day, or November 6th was, WeWork takes strategic action to significantly strengthen balance sheet and further streamline real estate footprint, which is better known as them declaring bankruptcy. I love the euphemisms around that. It's pretty cool. So, yeah. At one point, I think this was valued at $50 billion.
Oh, man, they took a big hit. Well, they had the right idea. You know, they had a very good idea.
They had the right idea until everyone started working from home.
Yep.
Except for us soon, I guess. So too late for them.
Yeah.
And then also in chess news today, this guy is still fighting the rumors that he... Do you guys know about this story? This guy beat the best chess player in the world, and they accused him of cheating without a ton of evidence of hiding vibrating beads in his tuchus that were transmitting the chess moves to him.
Oh, my goodness.
His tuchus.
And who knows if it's true or not, but that's the sort of rumor that's tough to live down.
Oh, my goodness. And that's a really well written headline.
Do we have, that's from NPR, whoever's working polls, if we have chess players out there, because I've read about this story, but I don't know enough. If you could put a poll that's, did this guy put the beads there?
You sure you want to do that poll?
There's nothing wrong with it. It's just,
I
think it's
that's
fine.
crazy.
Did he sit on him when he was on the bus and didn't know it? Did he?
That'd be a hell of a coinky dink.
That's crazy.
Is this seat taken?
Yeah.
No, go ahead, sit down.
You're sitting next to me like, I think somebody's phone is going off.
Oh my God. That's just lunacy.
Yeah, there's nothing bad about this poll.
Oh, my goodness.
I knew this would start something in the comments, but behave yourselves. I figure a lot of you guys play chess out there.
I don't know. I never
have
got into it. If you can't plug it in, I don't play it.
I have lost many a chess game.
Definitely easy to do.
Yeah.
All right. Well, you can go back to the markets after that lovely thing. Maybe I'll come back in about 15 minutes if we can find some more.
Get some more goodies.
Yeah, I will.
There you go.
Or some more cool stuff. Well, don't forget, 11 o'clock today, we've got Ask the Risk Manager.
Yes, we do. 11 o'clock. You know what? I swung and missed on that one. We got Mick coming up here at 11. And just want to make sure that if you've got a question, I'm going to post a link in the chat. This is a great time. I mean, there's a lot of people that do have questions that the risk manager can answer. And if you want them answered, please use this link. I'm going to post it here in just
there you go.
Second. Just a second here. I'll post it. And there it is.
$675 now offered at 4,400 in the S&Ps.
Yeah.
Still, and showing more liquidity above. I wonder. We don't have to do a poll about this. Should I just close my eyes and buy? Yes or no?
Or should you close your eyes and sell?
Or should I close my eyes and sell? I don't think selling's working right now. We're above weekly kickoff high. NASDAQ's above that trend line. Everything seems to be coming up roses here.
Remember, every rose has a thorn.
So we got no, yes, no, buy, quarter flip, don't short, buy, sell, buy, sell, buy. Wait for a pullback. That's what I'm trying to do. I want to
close your eyes, hold your nuts, and buy. There you go. Natural tranquility.
That's it. I have done that, believe it or not.
We have. But my hands are cold. Well, those aren't your hands.
We're going to try and see if we get a pullback to 95.
Quick poll update. 59% of people think the guy did it.
Huh.
So
Wow.
take that for what?
The edge. You got the edge. All right. Once again, I posted that link for Mick.
Beads say bye. What about Lacey? Lacey, what do you think?
She wants a cookie.
Yes, of course she does.
My dogs have trained me very well. Every time I go out somewhere, I'm always bringing home a new package of some type of cookie jerky or something.
Hello, Patrick. I was rich before today. So, Chris.
Well, our gold is tightening up. We're sort of getting a nice development of a flag here on my 15-minute. I think that's the only thing that's sort of cooling off here, considering the ES crude and the NASDAQ. I'm glad I got in. Done. Not going to fight it.
So I was going to answer Chris's question here. The opening range is now the first minute because of electronic execution. What significance does the initial balance still hold? So there is some question about that. One of the godfather of market profile, Jim Dalton, I think, has some doubts as to the validity of the initial balance anymore. Now, there's a number of things that he wrote about that he kind of has kind of changed as markets have changed. He's changed. Everything changes. I think he views it as still important, but not as time-bound as the first hour of trade. And he even says in Mind Over Markets, with the S&P, is if the market is extending the range at the first hour mark, you have to include the range extension into the initial balance. So it's not a rigid number as it was initially kind of written. However, he says it's changed a little bit, but it's still important. Once we left the initial balance this morning, we've hardly been back. We've hardly been back. So, we've got some continuation. What happened? I mean, the S&P's open in range and in value. The initial balance matched Friday's high, which was kind of a level, last week's high that I was kind of looking at as somewhat pivotal, as well as the weekly kickoff level, 94. Well, the market stopped here, settled for a minute, continued, went right through that 94 level. So, because now we're seeing a range extension and buying coming in, we've got, delta, which is congruent with direction. That's all good. We have 2 days of negative delta against direction. So does that indicate buyers that were present? It's not really showing that much, open interest, but the initial balance certainly offered a good opportunity to the upside today in the S&Ps. We're seeing range extension continuing to happen. Lacey, what do you want? I think she's telling me to buy them. Would you stop? I can't even put my hand on my mouth. She's moosing me. So, the initial balance, say what you will, is important still. I'm going to go back here and we're going to take a look at how often the initial balance is one extreme of the session or another. Today, yes. Yesterday, yes. Day before, yes. 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 No. Almost. Yes. Yes. Almost. Yes. So we did we watched this for a while. We saw about 30 instances, and it's between 65 and 70% of the time, one extreme of the initial balance remains the one extreme of the day. Here's one that doesn't. Yes. 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 So you can decide for yourself if you think that the initial balance is important or not. We've seen several days where the opening range remains the extreme as well. Yesterday, Friday, Thursday, almost on Wednesday. Initially, on Tuesday, the opening range was the low of the day. The initial balance remained the low, and then the market turned and headed the other direction. Week high, continuation, late spike, continuation, late spike, continuation, balance, now perhaps some continuation. We do have an order in to buy a pullback here. We'll see if anything happens there. But as usual, late to the party. Seems to be a habit these days. CL looks terrible, Anne Marie says. Good to have you back, Eddie.
Sorry, I needed more coffee, and fur babies needed to do their business.
I was just going to say I could make a coffee run here if I have the opportunity. So Anne Marie's saying, yeah, crude oil looks bad. I mean, 78 even is weekly kickoff low. I think she was not too far off of that on the levels that she was looking at.
It just does not have support until 77.30,
77.60, right? Yeah. So.
Well, I tell you that poll that you put out, 75s or 95s, and I swung and missed on that one for sure. I was going 95s, but we had a decent amount of people thinking that this crude would break down to that level, and hopefully they played it and stuck to their guns.
Yeah. Somebody was asking about the glass sculpture behind me. It's a dolphin.
It's Dan Marino.
It's a dolphin.
Somebody was asking, it was Antonio. I need a tour of your back wall, Eddie. Oh, look at that. Nice. That's pretty.
Yeah, it was a gift from a friend of mine. I have a bunch of dolphins in the office here.
You got friends?
Yes.
Wow.
I've got lots of friends.
That's nice. That's nice.
Dolphins. Is that Ray Finkel? It is hard to run a show and trade. Yeah, absolutely. I'm getting used to it though. I'm not really that worried about it. I know Anne Marie. Over time, I will get my chops back, and we're gonna make some good opportunities here.
Laces out, Dante. Laces out.
The ones I've missed,
Oh, you got 10 o'clock. Yep, it's the village.
Yep.
Making sure those.
Wait. We
Air
might
raid
hear Lacey
sirens.
howl. She likes to howl at it.
Really? See, mine are going off too here.
She's turning her head. You know how dogs kind of.
All right. No. Okay, Trader.
Lace is out, Dan. Come on, Lace. Do it.
Well, today at 11 o'clock, coming up here in an hour, we're going to be having, we're going to have Shoulder Tap with Brett. And then right at 10:30, so about half an hour, we'll have Shoulder Tap with Brett. Top of the hour, 11 o'clock, Hogan Mick. There she is.
That is wild.
Wow.
You're so cute. You're so cute, Lacey.
There you go.
Oh my goodness. Ah.
You were right.
Well, now she's looking at me.
We're talking dog talk.
That was amazing. That was amazing.
All right. But anyway, I was going to say that we've got a session here with Power Players with our risk manager, Mick. So a lot of questions that you do have throughout the week are directed towards Mick. And now I've got mine going off again. Maybe I've got an attack here somewhere. I'll look out my window. Make sure I got my 9mm ready to go.
Boy, Gold is just range bound. Testing weekly kickoff low.
I've got a nice little flag there on my 15. Yeah, I'm glad I got in when I got in, and I'm done when I'm done. So 11 o'clock. Don't forget 11:45 today. Jack and Alyssa. No, it's not a John Mellencamp song. It's our Jack and Alyssa doing Top Quiz and group coaching. Coach Paul. And I will be with Coach Paul today, and I'm not sure what his topic is. Oops, I forgot to send a note to him. Yes. Oh, topic is the history of technical analysis. So group coaching today with Coach Paul. But there you have it, man. There you have it.
Awesome. All right. Eddie, you gonna be able to take this for 2 seconds? I gotta
get some coffee. Let Lacey out. That's fine.
Yeah, let Lacey sit here and talk a little bit.
Yeah,
I'll be right back.
Okay. All right. Actually, we got some. Taking a look here, and Mick has a nice collection of questions already. So get your question in. He will get those answered. Those are going to be the first questions answered. The ones through the email. And if there is time available, we will be doing questions from the chat. Jack. Let's see here. P&L Eddie, 424. That's me, 424. You got something else for us, don't you, Jack?
Yeah, as long as Hope's gone, we got a couple more news stories. One financial. First off, the Goldman Sachs measure of U.S. financial conditions index fell by a 0.5 percentage point last week. You can see there, which is one of the largest declines of the past 2 decades. So
wow,
you'd expect that to happen with the yields falling. Things are loosening up a little bit. So we'll see how that goes. And then to pair this with another story that's maybe not as financial, James. Unfortunately, the 104-year-old woman who was vying to become the oldest skydiver, that siren's driving me crazy right now. Unfortunately, she passed away at 104 before it could be confirmed by Guinness, but hopefully they still give her that record because that's impressive.
I would hope so. 104, my God.
I once, back in the day, purchased a group. What do they call them? Groupon. Back when that was a thing to go skydiving.
Right, Sandwich, Illinois.
Yeah, something like that. Well,
Yeah.
I bought it, and then I told my mom about it, and she said that she would pay me double what the Groupon cost not to go.
To go.
And I lifted that offer, and that's a good trade. So I've never been skydiving. What about you?
You know, I tell you, at one point, me and the buddies were like, "Yeah, we're going to do it." They got it here at Sandwich, Illinois. There used to be skydiving there.
They got it in a lot of places, but it's. I don't know if I really want to go to a farm in Indiana. And
you know, we used to on the broadcast. Oh gosh, man, I'm sorry, I forgot her name. She was a local on the Board of Trade floor. Oh, man, they were sisters. Suzanne? I think it was Suzanne. If you're out there, Suzanne, she would wingsuit. You know what wingsuit is, right? Where you jump out and you fly instead of just sort of pulling the parachute. You know what I'm talking about?
Oh, yeah. No, it's one of the most dangerous things you can do. I've seen a lot of videos where it looks cool, and also a lot of videos of people where they hit walls.
Exactly. A lot of them do, or they get a little too low. But she was wingsuiting. I'm like, you're crazy. So she sent me some pictures, or actually brought some pictures on the trading floor. And I was like, you know, man, I mean, she was like Laura Croft. She was an adventurer.
Yeah.
She'd go to.
I know what you're talking about. I know her.
Suzanne. She used to be in the
Russell pit. In the Russell.
Yeah, Russell pit.
Yeah.
Blonde.
Yeah.
Yeah, we had her on the broadcast a lot. She'd come on the broadcast.
Yeah, a while back.
She did wingsuit. I mean, that's like, that is just ludicrous.
Speaking of adventurers, Raymond in the chat says he has 75 static line, 800 feet elevation military jumps.
Oh, man.
Yikes.
Those you got to. You got to do it. You know. Wow. Static. So you're airborne, huh? That's pretty neat.
I'm too gravitationally challenged, so I'm not jumping out of anything.
No, not anymore. I wanted to at one point. I just went to Skydive Chicago 3 weeks ago. Thank God that you're back there, Tic Tac. That's amazing. That's crazy, though. I don't know. But James, I think James has got some goodies for us here. What do you got for us, James? We got what? Tip of the day on this day. There we go.
There we go.
Tip of the day. Now, one of our tips was last week. Was it patience? Yeah, patience last week, which sort of played out very well. Tip of the day here today: have a realistic winning percentage. When you have a realistic winning percentage, you can dilute the feeling of having to be perfect. Well, nobody's perfect, but we want to be there. Right. Always winning doesn't happen in trading. No, sir. No, ma'am, or no, it doesn't. And, you know, John, I tell you, we've talked to thousands and thousands of traders, and many of them just cannot accept that. And I think that's one of the biggest downfalls that we have is we get sucked into one more trade. I'll get out of it. You know, I tell you, when we'd have a trade or an error on the trading floor, I mean, I'd be like praying to the almighty trading God, come on, man, just turn around.
Right. No. Yeah, it's not a strategy to do that.
Not at all. No. Not at all. But, you know, it's you've got to. But the best thing about it, it's, you know, they say it's not how many times you fall off the horse. It's how many times you get back on the horse. And the same thing here, you know, when we're talking professionals, I mean, in any sport, the top star gets burnt every once in a while. Right? They make mistakes. They give up runs. They give up touchdowns. They give up goals. They screw up every once in a while. But the thing is, how well do they recover from that? You know, I mean, some of us are sort of wired to the point where I got to get that back. I got to get that back. And it's a little bit what we talk about revenge trading. All right. Mm-hmm. That's what we really don't want to do. But we want to put our best foot forward when we're looking to gain something that we have sort of lost or erred in to get back on a positive note. So, well, we got...
Well,
moving out of that flag.
We've got some talking feds here. Just looking at some of the things that they've said. Waller made no comment on monetary policy. Schmidt made no comment on monetary policy. Couple of things here. Waller did say prices probably won't go back to pre-pandemic levels. So no matter what they do, we're not paying $2.50 for gas ever again.
Well, you never know. You never know.
That's true. What the heck do they know, right?
Well, you know, I didn't think I'd be paying 99 cents for gas a few years ago.
Right.
And I was. Wow, 99 cents? Hey, John, Trent Evans, please let Hogue know that I know, that he knows, that I know, that he knew, that I know he went through a slump, but his insight and training has been priceless and really helped. So almost there, almost funded.
Awesome.
Big old hug from Trent. That's good. Thanks, Trent, for sharing.
I'm glad. That's the goal, man. We all are looking forward to all your success. We would love it if everybody we could be successful at this.
Yeah.
And it's a lofty goal, but we're going to keep trying. And Trent, thanks for letting us know about that. Thanks for letting me know about that. And glad that things are going better. Let us know when you succeed, and we will be hoping that you continue to succeed. That's the thing, right?
Well, you know, I tell you, we learn from our mistakes. Sometimes it takes us a few times to realize, okay, you know what? I'm not sticking that screwdriver in the electric socket anymore. You know,
right?
Yeah, I did that as a kid once. You know, here's the thing: as a kid, don't ever tell your kid not to do something. Right? Don't do that. You don't do it. I mean, that's exactly what my mom said. You know, and what do I do? You know,
well, you only have to do things like that once, like putting your hand on a hot stove. You know,
yeah.
And my dad always used to say, "Well, that's the way you learn, kid." But I think I mean, little boys are always going to test that stuff. I know I did. I know my son did. My daughter, we said, "No, don't touch that," and she never would.
That's why, you know, women are smarter.
Yes, they are.
You know, they are less riskful as traders. So whatever you do.
We used to just be able to put Sarah in the middle of a room and put toys and books around her. Heck, we could go out for 4 hours and come back. She'd still be sitting there entertaining herself.
That's good.
Playing and reading books. Luke, he'd get into something.
It's the adventurous in us now.
Yes. The parenting adventure, right? But now they're 26 and 24, so they're great people, great kids.
Seems like Luke is an adventurer. He likes to do a lot of different things that you know, things that you mentioned. I'm like, oh wow, he's doing that, huh?
Yeah, he likes playing golf. He likes skiing. He and his buddies that have been friends since they were in like early grade school. They're planning their turkey bowl football game for Thanksgiving Day. These guys are big Steves, man. They are just constantly together. I don't know anybody that I went to grade school with, or even mostly high school. I don't know anybody anymore. But these guys are going to be friends forever, it seems.
Yeah. I'm still got a lot of friends from grade school that I hang with. Yeah. We're like tight brothers, which is pretty cool. But you mentioned the turkey bowl.
Yes.
We used to do Turkey Cup, where we do inline skating, which was pretty cool. That's pretty
hockey.
cool, man.
There you go.
Hockey, yeah, hockey. Yes, we've got. Let's do our top yesterday's top profit and losses, P&Ls. Let's do those here. Jack, you got those set up? I'd like to see how we did yesterday. There it is. Omar Siri.
And I'm still not on it. Ding.
You're not
Just
on
missed, Hogue.
Just missed.
Just a bit outside.
Just a bit outside.
XF 14K, yesterday's best. Well, see, now these are like phenomenal days. I put up something like this. I tell you, my Max with 13,000. Kyle K. Is that our Kyle? I think that's our Kyle, right?
Indeed, our Kyle K.
Kyle.
Kyle K with
another 11 grand.
He has surpassed Hughes.
Uh-oh.
So currently, of all the active accounts, Kyle has the highest balance plus payouts.
Has Hughes contacted us? I think if his so-called wife was saying that he would email us. Let me get these people on here. Abdel, 8,159, and Pradeep, 7,527. That's awesome. The only live trader here was Kyle. Everybody else was in XFA, and well done.
Yes, really good numbers. Really good numbers.
Yeah.
See that makes us happy. We love to see success, profits, make money. Looking forward to seeing everybody.
Will, you were swinging for the fence, man? Is that what you did? Swinging for the fence? Oh, man. Sorry to hear that. I tell you got to go for those base hits. You busted the account swinging for the fence.
A home run would be awesome, but this trader is looking just to get on base.
Just get on base here today. That's basically the smartest thing to do. Remember, like Patak said earlier, Michael Patak, you build up that cushion. When I was asking him, are you scalping? He was just getting small profits to build up a cushion. So in case he did have a bad trade, you'd be able to fall back on that, hopefully, and go from there. But props to you for bringing it up front. Most of us would probably say, I ain't saying shit about that. But get it off your shoulder. Share it with the community and get back to business. It's the best thing you can do.
Once in a while, when you're just trying to get on base, you might accidentally hit a home run.
Right. Oh, yeah. You catch that market at the right time. You're exactly right, Johnny. Single into a double, double into a triple, triple, round the bases there, kid. Aurora just got invited to Top Step X. Thank you so much to the entire team. You guys rock.
Cool.
Yeah, and don't freak if you have not gotten the invitation. We are, as Mr. Patak said, we're opening up about 100 to 200 a day, so you might get that. Invite. So no freaking out. But we got another 10 minutes here, and we're going to be talking to Brett. Remember, if you got any questions or anything that you feel could be added to the Topstep TV, especially interviews. Okay, if you've got somebody that you think would be a perfect power player, all right, somebody that maybe mentored you, taught you, or somebody that you look up to, all right, let us know. If you can, send their information, their contact information to Topstep TV.
Let's not do that, because our email is getting pretty bashed. We'll get a form together and we'll post that tomorrow.
Okay, we'll do that tomorrow. I just know because I know Michael mentioned it that he wanted to get that done. So we'll do that tomorrow. Okay. But if you've got somebody, gather that information, that contact information, and then we'll definitely have something where you can post it tomorrow.
Eddie, the market keeps teasing my bid here at 95 even and got within 2 ticks of it so far and has not yet executed.
Are you trading the ES or NASDAQ?
Yes.
Okay.
I can't trade NASDAQ, Eddie. Gives me heart palpitations.
Yeah, same here. I'm coming off that top.
Mm-hmm.
Huh. Mm.
No.
You got to remember too, Johnny. We're right by that 44 even. You know.
Right.
And usually numbers like that tend to hinder progress, or at least stop them for a while.
43.94 is weekly kickoff high. So I'm trying to get in as close as I can to that. So we'll see. Okay. Well, it's 4,400 big fat round numbers, right?
Yeah. The psychological, as they'd call them. And, you know, I mean, they have some sort of little magic to them, if you want to call it that. But otherwise, when the masses decide, okay, enough is enough, they'll run right through it.
Mm-hmm. Yeah, let's see what we see as far as, we still have some liquidity up at 02, some liquidity up at 04. We'll probably get that taken out, but I just missed that entry. Damn. Isn't that always the way?
Yeah. Well, you know, the bus mentality.
They ain't over yet.
Yeah. I tell you this, just watching crude here, and boy, this is getting a little tight here. I think it's going to pop in the crude. I'm done with gold. I'm not even watching it anymore. I mean, it's a cluster foo right now.
Yeah,
I don't know which way it's
as we call it, barcoding.
Yeah, I call it the cluster foo barcode. At your local Walmart. Get them while they're hot. We've got an action photo. I was mentioning about some action photos. We've got one from our fearless leader, Michael Patak. You got it. Can we share? There it is.
There it is. Yep.
The action photo of him on a divvy bike. What's a divvy stand for?
I don't know, but I'm not getting on one of those. So
actually, they look pretty badass. I mean, they're very heavy duty bikes.
Yeah,
look, he's got a little basket for his, like, he's doing a Dorothy there. He dropped Toto
for his school books.
Toto, yeah. These are the bikes that you can do in Chicago. They're blue, and you put your credit card in, and you pull a bike out, and you sort of ride it around for a while. Hey, years ago when I went to Amsterdam, they had the same thing. I think their bikes were yellow, and it was just not used to it. But I don't know, how old are those divvy bikes? Maybe about 10 years old so far already.
Yeah, maybe they've been around for a while.
Yeah,
but to me, a divvy is an Uber.
Call an Uber, yes.
Call an
Uber. Divvy in Scotland is another word for idiot.
Really?
Right. Is that our Peter Davies? Is that you, Peter Davies?
Somebody said in England it's silly. Divvy is silly. Yeah,
it is a silly bike. I mean, they're all sort of girl bikes. They don't have that that bar, that nut buster bar,
which never really made sense.
No, but if you were caught riding a girl's bike back in the day, you'd get some shit from somebody. Well, like the local bullies. At least in my neighborhood, John. I don't know. I don't know. MP is riding a bike while on the phone.
Mhm.
There you go. Conducting business. Conducting business. There you go.
44, 5. Yeah, there's some size up there. It's that liquidity that I think the market is targeting. I'm trying to get into a long here, but
if you like what you're seeing, if you like what you're hearing, if you like the smell quaffing from your computer,
probably
hit
coffee.
the like button because I'm making pork chops. Yeah, hit that like button. Let's get it up to 1,000 at least. We've got over 2,000 people watching, at least 50%. The love-hate relationship. And don't forget to subscribe. Please subscribe. Show us some love. Hit that like. There you go. Kicking it in there. Subscribe and have at it. Have some fun.
Rowan, I'm trying. I got a bid in. It got close to it. Now it's running away. Maybe I was being too cheap to try and get into that long, but it ain't over yet. We'll see what happens. We'll see if it comes down and gets us.
Well, as Yogi Berra said, it's not over until somebody sings.
It's not over until it's over.
It's not over until it's over. Coming up here in about a half an hour, don't forget we've got our good friend Mick going to be joining us for Power Players, and he's got a good arsenal of questions, but we're going to be taking questions from the email only. I think today is what has been discussed. So there is the link. I put it in there one last time. We got Brett coming up here in about 4 minutes, and I don't know, dude. Jack, can we take a coffee break here, and we'll come back here half past?
We can do anything, Eddie.
We could do anything.
We can do anything if we put our mind
We are
to it.
women hear us roar.
And I'm working on a forum too. So after the break, or even during the break, I'll post it in there if you want to put in your guests.
I am the Lizard King.
I can do anything.
I can do anything.
Cuckoo Kachoob. All right. All right, we're going to take a little break here. Me and Johnny are going to get some more coffee.
Yeah.
And we'll be back here with Brett and Shoulder Tap.
See you in a couple minutes.
Don't go away. shoulder tap with Brett Goodwin. Shoulder tap. Brett. I love that.
Good morning, Mr. Horn, Mr. Hoagland. How are you today?
Morning.
Mr. Goodwin.
I love the
Professor
entry
Goodwin.
song, Eddie.
It's yeah, celebrate, dance to the music. So, Brett, I love that shirt, man.
Oh, thanks. My fall flannel. They're
Nice
making
and-
appearances this season.
'Tis the season, yeah, nice and warm. There you go. Cool.
Oh yeah. Yesterday we had a beautiful day in Chicago. It was, I think, about mid 60s. So loved that.
It feels like it's
outside
at
for a little
now.
bit.
Yeah.
Yeah, had some traders making money yesterday. I know I saw Kyle up on the leaderboard yesterday. Love to see that. And
yeah.
we've got some shoulder taps for today too.
Sure.
Should I roll right into it, or I've heard a lot of stuff discussed this morning that, yeah, I know. Did either of you go skydiving?
Hell no.
I don't know.
No way.
I'm gravitationally challenged.
Right. My fat ass would hit the ground before I'd be able to pull the parachute. Gravity'd be like, oh, cool, here he comes.
Nice. Yeah, one thing that I caught that I love, John, I think I heard you say it, was sometimes you go for a base hit, and I'm getting back to trading now,
Sure.
obviously. But sometimes you go for a base hit and you get a home run. And that is exactly how it should work.
Mm-hmm.
And going for home runs every day, it can work for a time. But it can be a stressful and difficult way to make a consistent living.
It sure can be. Yeah, you're always looking for the home run. You're going to strike out a lot.
Yeah.
Strike one, strike two, strike three.
Yep.
You're out.
You're out. Yeah.
And I mean, really, that being said, I feel like every trader, if they're in the markets for long enough, is going to be guilty of trying to hit home runs. And for myself, I would learn a lesson, and then 4, 5, 10, 20, however many good days would go by, and suddenly that pain that I was feeling before doesn't seem so great. And hey, you know what? Why don't we try that again? And then I generally ended up learning very quickly that the pain was still the same as it was at the time that I first caused it.
What do you got for us today, Mr. Goodwin?
Sure. Today we're going to start with Sari. Sari is in an express funded account, 150K. Sari has their third benchmark day so far, and they're really doing well. They are swinging big. 75% winning days, 66% winning trades. The averages are pretty good, especially for a 66% winning trade average. To have a similar winner-loser average is exactly what you're looking for. It adds up real quick. Even with those numbers, the reason I wanted to highlight Sari is because Sari's average winning day, even though it's only 3 days, is 10 grand a day.
Okay.
It's a little bit higher. I rounded down on that one. The one area for improvement is limit the losses. The 2 days have been daily loss limits that were not winning days in the account, and you've got almost 30,000 in the account and 3 winning days. So my recommendation: work for 2 more days, benchmark days for a payout, and also work on being consistent. Those are a couple of things that are going to help you get called up into the live markets, is that consistency. We're not looking for 10,000 today minus 3,000 tomorrow and the day after. We're looking for a little bit each day. And sorry, you're close. You're really doggone close, and I want to see you get there. And it wouldn't take much to, even though it's a young account, we have seen a little trading from you in other accounts, and it's looking good. It's promising. So looking forward to what we see in the future with you in this express funded account, and work towards a payout. because even though it is a simulated markets, we are able to give the payouts based on the data that we're able to collect and trade from in the simulated markets with our traders.
So, Brett, if I'm looking at this right, I mean, the average daily P&L is $7,100 with an average winning trade of $350. Either we're a pretty active trader or we're getting into some positions using one lots. You know, I mean, to have an average winning trade of $350 to get to an average daily P&L of 7,000. That's one, two, three. That's 3 times. That's 21 trades. I think, if my math is right, that we're going to have to be right on all of those to get to that average daily P&L. Not sure what kind of size Sari is accumulating, but I don't know the time frame or how long they're staying in trades. But with that winning trade percentage, 66%, I'm thinking shorter time frame, bigger positions.
Yes, and actually today was the second day that Sari hit their daily loss limit, and they did it with, I believe it was 5 15 lots. And that's kind of what I'm talking about when I say Sari might want to consider working on limiting their losses. Like exactly you were saying, John, start with a 1 or a 2 lot or a 3 if you really have to. One other thing that you reminded me of in a previous airing of Topstep TV was your biggest jump in risk as a trader, and I know that mine was when you move from 1 contract to 2 contracts.
Right.
And that is so true. That is a one time you double your risk.
So you're watching Sari today, and you said there were 3 15 lots or 5 15 lots. Or are they putting them in as 15 lots, or kind of going 1 1 1 1 1 1 1?
No, they're doing 15 lots.
15 lots.
And
wow.
It's nice when it works. I'll say that.
Oh, for sure.
Those other times, they can be a thorn for you. I remember when I started trading live, I did a 1 lot, and I think my hand was shaking and I was terrified.
Sure.
And my mentor was sitting by me when I did my first 2 lot or added a second contract to my first position.
Mm-hmm.
And I mean, once again, it was just the same. Like I turned to my mentor and I go, "Hey, can I, this looks good. Can I put a second one on?" And he goes, "You should have already done it." And because I had some time under my belt at that point, and I could afford the losses of the 2 lot.
Sure.
Your mentor sounds mean.
My mentor was great.
Mach Schnell. I'm Schnelling.
So what I'm thinking is, I mean, this is a pretty short time frame trader. If we're trading 15 lots and the average winning trade is $349.
Yes, very short time frame.
Yeah, you're not in for very long.
They're generally about 5 minutes. To give you some frame of reference, they are a NASDAQ trader.
Okay.
They average right around 200 contracts a day. And then I'm not moving on. I'll be moving on to Olufemi shortly, but I did make note that a contract is different than a trade. Just so everybody viewing out there knows, a contract is one contract is the minimum increment in a product that you can trade. Crude oil would be 1,000 barrels of crude oil in the big crude contract. A trade can really be anything. 15 is the most contracts that the top steppers can do in a trade, but one trade would be one order that is executed. And that can be any number of contracts. If you're a large fund, it can be thousands or tens of thousands of contracts. If you're a small trader, it can be a 1 lot.
Right. Yep. Okay.
So
just trying to get a kind of a feel of how Sari is doing this. So when you do have a pretty short time frame, I think. And I never mean to say that trading is easy, but it's easier to have a higher win percentage when you're in a short time frame, kind of like Sari is here.
Absolutely. And when trading is going well, it can seem easy.
You're right. Right. Yeah, you're right.
And boring, like we've discussed before.
Yeah. Well, making money, I don't know.
It's boring or not.
No, they're not that boring. But
well, as far as the roller coaster ride.
Yeah. Yeah. All right. Thanks.
So
series doing well. That's good.
Yeah, we love to see it and just get that consistency and we'll keep looking at you for calling you up to the live markets in the big leagues. The next trader I wanted to highlight is Olufemi. Olufemi is a trader that we looked at yesterday, and they were in a 50K express funded account, and we decided that Olufemi is going to be trying it in the big leagues. Olufemi is being called up to live. We let them know yesterday. I actually talked about Olufemi a couple of weeks ago when I did the shoulder tap for the week. And Olufemi was, like I said earlier, was the reason I wanted to talk about the difference between contracts and trades. Olufemi has 20 trading days in their account. And with that, they have traded 104 contracts total in the account.
Wow.
And I'm trying to look at my notes. Olufemi has an average daily P&L of almost $700, and that has translated into almost $14,000 that they've been able to take in payouts and move to live with.
Even with that large commission, huh?
Yeah, right. We could talk about sorry and large commissions with the 200 contracts a day, but there have been days where traders can make $1,000 and get it eaten up with commissions very easily.
For sure.
So, but the 20 trading days and 104 total contracts in this account is really something. They are picking their trades, and they are doing so well with the 79% winning day rate. They're doing fantastic. The one thing that I would say they may want to consider is cover the trades at a loss sooner rather than later. And then also maybe even pick a few more trades. I think I said that a couple of weeks ago. But most days we see single digit contracts. The most I see are 12 contracts in a day. Mm-hmm. So very conservative, what we like to see.
And that's $700 daily average P&L stacks up pretty quickly, doesn't it? Day over day, you do that. I mean, you're making good money.
Yeah. Every $100 that you make a day is $25K. So the math is easy. If you can do it every day, that's $175 a year.
There you go. And I like you said that maybe cut the losses a little bit quicker, but at least it's the right way, right? Winners are bigger than losses. And when you're at 75% winning trades, you're making money.
Yeah.
Yeah. Very nice. on top of that, John, I'm not sure I even looked at this earlier, but their winning day percentage at 79, their worst day or their average losing day is 833. Their average winning day is $1,100.
Doing things the right way.
4 out of 5 days, they're making 1,100, and the other day they're losing about 800.
I can do that.
Doesn't get better than that.
Yep.
The last trader that I wanted to talk about is Eileen. And Eileen, similar to Olufemi, is in a 150K account, I believe, but also being called up to the live markets as of yesterday.
Very nice.
There you go.
We reviewed Eileen's account. They've been in it for 14 days, 86% winning days, 73% winning trades. So a lot of similarities between Olufemi and Eileen. They average only 28 contracts a day. And the one thing that I would say is in the areas for improvement is, like it says on the screen, be cautious of over trading on losing days. The 2 highest volume days that Eileen has are their losing days. And that kind of, like we talked about earlier, compounds a problem.
Right.
Not only are you losing money, but now you're paying for the execution and market fees in order to trade those products.
Areas cautious of over trading on losing days.
It's good.
Yeah.
There's no revenge trading emotions.
Well, maybe a little bit there, right? But just kind of going through these numbers, the average winning trade, average losing trade, basically even. You're going to have to keep that 73% winning trades to keep to stay on the profitable side. And pretty short time frame, do you think, Brett?
The time frame for Eileen is a little bit longer. They've got some trades as trade days where their time was about 50 minutes, almost an hour. Their average is right around 15 minutes a trade, both winners and losers. But they've got 75% winning trades and 25% losing trades. So again, a great percentage,
Right.
Especially when that average winner and loser dollar amount is very similar.
Very nice.
Mm-hmm.
So love to see it. The only other shoulder tap that I have for you, and I don't have a card for it, I'll give everybody a quick update on Hughes.
Sure.
Hughes being the live trader that we've been talking about frequently on Topstep TV.
Sure.
Hughes was tough to watch yesterday. Hughes went up about $15,000 in their live account and got their balance over $100,000 for a little bit. Hughes has taken big payouts out of the live account and their XFA that got them to the live account. And I tried calling Hughes. I couldn't get through, unfortunately, but Hughes went from up 15,000 to their daily loss limit. And I tried calling when they were up 5,000 with about negative 10,000 in open trade equity.
Ouch.
And it's painful to watch because as anybody knows, I or anybody trying to do nothing more than help a trader out or help somebody out, I can reach out to you and you can make me look silly by making a ton more money.
Right.
And I'm saying, hey, lock it in. Maybe stop for the day. Or, you know what? I can hopefully not, but I might be right if you keep trading and we see an outcome like this where instead of stopping at up 5,000, we're going from a peak of up 15,000 to a loser of 3,000. And it's painful to watch. We want to see Hughes and everybody taking money out of these markets.
Mm-hmm. Well, Hughes is a big guy. He's got to be able to take that. And I know it's difficult to watch. I used to sit in that seat for a long time, and I would see that quite a bit. You're up 15 grand. You see him get down to around 7,500, and you're like, okay, you gotta finish the day a plus player after a morning or a session like that, right? So you're like, come on, answer the phone. But you're right. I mean, you do stand the risk of having somebody cut off a really big day. But it seems like most of those days when they get to a high water mark and they start giving it back, they get about halfway back, and usually good things are usually not going to happen in that regard. You guys are great at this. We're so lucky to have you as part of the team and looking out for our traders. And we're looking forward to seeing Mick in a little bit here for a Q&A session. Hopefully, you'll get to watch that, Brett. And hopefully, everybody will watch it. But
I'm looking forward to that.
Yeah,
I think Mick. I think I'm going to be research team in some capacity for Mick, just in case something comes up. but while that's going on. But I mean, it's similar to what we were talking about with I call you up and say, stop trading and you make me look silly. It's similar to a fund manager or somebody managing somebody's 401k saying something to the effect of, hey, I've got this great stock that I think you should invest in, and then you do it. Okay, you make money in it? Oh man, I did such a good job telling my advisor to buy that stock. Or let's go the other direction. It loses money.
Right.
Well, come on, John. You told me this was a good investment.
Right.
What's going on?
Right.
So it's really a lose-lose situation that can occur. But it's not
tough spot. It's a tough seat to be in, but you guys do a great job.
It's fun to see. We're really lucky that we have so many great traders that we get to talk with and monitor on a daily basis.
You guys are like the eye in the sky, the big brother, keeping an eye out for our traders, which is good.
Yep.
You know,
I needed it at times.
I think everybody does, and some of us never had that opportunity. You know, you might have somebody like John. You know, you might have somebody in the pit that sort of elbows you in the gut and says, "What are you doing?" You know.
Yeah, I mean, we know Michael had that. I mean, there were a couple of guys in the pit that they tended to look out for each other, and you don't have that on, you know, on home trading, individual screen trading, and they're lucky to have you. I know there's a lot of people to watch, a lot of people to monitor. You know, sometimes I'm sure that there are so many people that you want to contact that you just don't have the bandwidth to do it. But you guys do a great job.
Right.
Appreciate that. Thank you so much for having me on. I think we've got Mick coming on to answer a bunch of questions for the traders at 11, so that'll be in a few minutes.
Before you go, Brett, any closing comments for our traders?
Keep it small and limit your losses. I mean, it's as simple as that. You can keep your discipline 99% of the time, and that 1% can be all it takes to bury you, unfortunately. So keep your discipline.
Beautiful.
Brett, are you going to go? You go cut up some firewood now?
I might have a hard time finding that in the loop.
There's benches on Jackson. They're made out of wood.
I might get a hotbed and a square meal out of it. So,
the soup kitchen down the street. There you go. Brett, you have a great day, partner. Thanks for coming on here.
Thank you both. Have a great day.
Thanks, Brett. Have a good one.
Awesome.
Yeah.
That's cool, man.
Yeah. Good man. Good man.
So top of the hour here. And inside of about 5 minutes, you and our risk manager, Mick,
yes,
is going to be with us. And, you know, there's just so many questions throughout the day. I mean, because I'm sort of monitoring the chat here for our YouTube. And I see a lot of questions that
they want to turn half of it into like
we got a little volume there. You want to cut that? You got that?
Oh, yeah.
Guys, there you go. Cut that.
Yeah,
there you go. Okay, they're done. You didn't want to leak any secrets out. You know?
Right.
All secrets all the time. I shared briefly, Dolby, if you can pin that form for a little bit. It was a form where you can request who you like to see on Topstep TV, and we'll do our best to track them down.
There you go. I pasted it. There you go. I saw Topstep post it, so I copied it. So who do you want to see as a guest here on Topstep TV?
Update on the position. I pulled the order to get that 95 long. Just not liking it anymore. So, and we're coming into the lunch hour, so we'll see if there's any opportunities later on. So I'm out. Didn't do it. Just kind of hanging around that level anyway. We'll see if we have some opportunities later on.
You got it. All right. Don't screw that trade up.
If you don't pay attention, you are going to Shawshank this trade.
Pay attention. Don't Shawshank a trade.
And that's the way it went for Andy.
What a great movie.
Yeah, it is.
What a great movie. Why don't you take a break here, Jack? Take a break here, get set up with Mick. Go grab yourself a quick sandwich or something that you'd like, a new beverage, and we'll meet you back here top of the hour. Sound good?
Don't go away.
Don't go away. Okay, we won't.
Welcome to a very special Power Players segment. We have our risk manager, Mick, with us. This is going to be a really good one. You guys sent in some really good questions. I'm looking forward to it. Mick, how you doing today, buddy? Your mustache looks fantastic.
Thanks, John. I'm doing super well today. Exciting morning. How are you doing?
Me? I'm living the dream. I'm good, man. I'm good.
Yeah,
Glad
got
to
your
be
face
here.
on TV. What's not to like? What's not to like? I'm excited to be included for the Q&A today with the risk manager in place of our Power Players segment. I know Brett took over the shoulder tap segment today. Heard that was good, and and I'm here. Let's roll.
And I saw you have your dog, Reva,
Yes.
in the office today.
Reva's in the office. She's sitting right here next to me, laying down. You can see her tennis ball under my desk behind me.
There you go. You got to have the tennis ball.
Yeah, I mean,
Those are
she's
very
got a
important.
dog bed in here. She's got toys.
She's
I
very
keep
well at
food
home there.
keep food in the pantry in here and whatnot.
Nice.
As I'm looking in my background, I got we've got our new little volcano over here. The
Yes.
steam, the humidifying machine.
Yeah, it's
Need
a little aromatherapy for everybody.
Yeah, it's dry up here. It's dry up here.
I bet it is. I bet it is. Well, so, we've got a lot of questions. You ready to jump in?
I am. I've reviewed a lot of the questions. I know we're going to have more coming in, but I'm prepped. I'm ready to go. Nothing I couldn't really answer off the cuff, so let's break a leg or two.
All right. We're going to make this really challenging for you.
You always make things difficult, John.
All right. I am going to go with the first question here. What's on your mind?
What's on my mind? Exciting stuff here in the Chicago Board of Trade building. Just met with a few people, Michael, Casey, and some people that own the building here, talking about a potential collaboration for some space right on the first floor, Jackson and LaSalle here at
Nice.
they call the Chicago Board of Trade building the anchor of LaSalle Street. And
Yes.
it's because we're at Jackson. It's a dead ends at the Board of Trade. You face straight north where I'm looking right now, right up LaSalle. And from up here on the high floor, we can see all the way to the lake as the
All
lake
the way to the
kind of
lake.
curves
That's
around.
right.
But there's been some empty space down on the first floor of the building that they want to kind of turn into a historical, old school trading floor museum.
I think that's going to be really cool.
Yeah, temporarily, I think these museums do turnover over 12 months or so. So it sounded like preliminary ideas were for us to share a space with the building in this museum where we would have the old school trading on one side of the room as you enter into the museum, and then potentially Topstep and our production on another side of the room, separated via glass wall. There's much more creative people than the people that were in the room with us having this meeting. Where I just came from 10 minutes ago.
Right,
And it
that's
sounds
gonna
like
be-
it'd be cool. It would allow for people who are on the sidewalk to look in, similar to the other news production companies here, where you can see it, check in, see all the equipment, all the filming stuff, talking about having some cool display boards for charts and markets
Nice.
and all that stuff. So, we'll get the creative minds on this and hopefully come up with something that would be a little bit of a different kind of tradertainment for
be-
our viewers, as well as anybody who's walking around the sidewalks in Chicago.
That would be something else. That would be cool. All right.
It would be cool. Really quickly, last thing on that, they're talking about potentially taking some of the boards, the old boards that were displayed.
Oh, okay.
Some people might call them the ticker, but they were the boards that had all the price quotations for the different markets, and that could be potential backdrop.
That would be cool.
Nothing set in stone. It's just an idea right now, but
Right.
it seems like both parties are willing and able to do something cool with the space.
Cool. That'll be awesome. All right. Now on to the real questions.
Bring it.
What type of psychological record do you keep, and how do you use it to improve on your trading?
It's a great question. Record keeping is always important, doing your homework at the end of the day. John, you're a big preacher of that. Psychologically, stuff has changed with me over the years. I am not the same person that was looking at the markets when I was, when I started trading when I was 20 years old. Over time, you learn things, you make mistakes, you learn from those mistakes, and you mature. I'm not saying I'm the most mature person, but psychologically, my trick to keeping emotion out of my trading is I'm not an active trader that much anymore. I'm not very active, I should say. And whenever I do take risk in the marketplace, I'm always framing out what my risk is. My entry, you guys have heard me say it on Coach's Playbook, now on Shoulder Tap, is anytime you put a trade on, you need to have couple things in mind prior to even putting the trade on. You need to know where you're getting out if you're wrong, and you should have a very good idea of where you're getting out or starting to get out if you're correct. If you can frame out those things ahead of the trade, you're already running the outcomes through your mind. So if I know if I can only risk this much on the trade, or if it goes to this price level, I need to puke the trade and get out because it could continue against me. If I've already framed that out and it's a loss or it's a win, then I've already kind of mentally prepared for one of those two outcomes, and it makes it so much easier to move on to the next day. But so that's like where the psychology, the emotion, if you can frame things out like that, it's so much easier to, stomach a loss. Also, chances are, if you're framing it out, your losses are going to be contained as they should be, and you're not going to watch markets go against you further to the point where it does screw with you emotionally. Like, I don't take risk on trades if I have a loss and that loss is going to screw with me mentally. I'm not taking that kind of risk. I'm taking risk on trades that if it is a loss, boom, it was a loss, I move on to the next one. So having that framed out ahead of time is probably the best thing you could do psychologically for yourself in your trading.
So you would say you're already preparing for the outcome of a trade before you even put it on. I mean, that's one way to kind of preempt the need for a psychological record. I mean, I know you've been trading for a long time. You've been through all the psychological gymnastics that you can go through, and you're preparing yourself before the trade.
100%. And, when I think about psychology, like, my mind goes to thinking about cold streaks and how depressing it could be if you're just going to work day in and day out and not making any money. And that's when, step away from trading for a little bit, take some time off. It's, there's certain periods in your trading career where, you wake up super early because you just can't wait to sit down in front of the computer and see what's happening in the marketplace and see if you can find opportunities, to waking up and hitting snooze for an hour because you don't want to crawl out of bed and go sit down in front of that computer and just, become miserable,
right,
because you're on a cold streak. So make some separation. The markets are open 23 hours a day, 5 days a week, all year long. They're not going anywhere. You can take some time off to, heal mentally and then come back. And I've done that before. I did that in the first year I traded. I took a few months off because I wasn't getting it right when I was shorting soybeans every day and losing a ton of money. I almost put myself out of business. So I found some odds and end jobs during that time, got a different appreciation for the dollar, and then came back knowing that I had not liked those odds and end jobs that I was doing to, get by. And I took the trading a little bit more seriously. Almost blowing out early on was probably one of the best things that could have happened for me. I know Michael talks about how losing those three $30,000 accounts turned out to be something very good for him. You get stung good enough, you're not going to do it again, whether that was me, him, or other traders. You learn from those mistakes.
And my dad always said, the hardest steel comes from the hottest forge. Sometimes those lessons are really valuable moving forward. All right, the next question.
Yeah.
I'm not sure how if you are able to or willing to answer this. We really try and focus on trader success here, but the question is basically how many XFAs lose their account on an average day. Now, that doesn't mean failure. It just means a not successful yet type of situation. How many?
Yeah, it's a good question. I'd be curious myself if I was out there. I don't have the answer for you because I'm more so looking at the side where, hey, these are the people that are doing well. Who are we calling up to a live account? So I'm not looking at all the failures, but there's a lot of XFAs that are trading on a daily basis. We have a lot of XFAs that close every day. We have a lot of XFAs that start every day. So it's a high number. I wish it was a smaller number. We want good traders coming into the prop firms, but the express funded account is still a place where people who have proven their strategy in the trading combine in quite short order, they may still have some things to work out. And, yeah, there's a lot of XFAs that close on a daily basis. I'm not going to be able to provide a more clear answer than that, but I think that's what we're going for. I'm not going to sit here and tell you nobody blows out of XFAs. It happens.
It happens, and it's never a failure. It's a not quite yet successful, and we look for everybody's success here, of course.
Yeah, and I will try and highlight some of those in the shoulder tap segments too. I'm not just talking about people that are doing well. I'm talking about, there's shoulder taps and, hey, so-and-so got off to this start and then, something happened. Or I'll talk about, I've mentioned recently, some traders that they did really well in their trading combine and then they come in day one, daily loss limit. Day two, they risk too much money. That's not Topstep, though. These traders are in control. And now there's nothing you can do if your strategy is not working in a certain market environment other than discontinue trading. But for a lot of traders out there, you do have, as long as you're not risking too much on a daily basis, you should be giving yourself the time to figure out, I need to pump the brakes. I need to scale down my size. I need to not risk so much. And you know what? If you fail an XFA or your XFA is closed for hitting the max loss limit, what could I do differently next time? And that should be something that everybody's thinking about. Don't be down on yourself. You don't need to spend a lot of time in the trading combine to pass it. So if you find yourself becoming a funded trader and it's not working out in that account, always be looking for areas to improve and learnings from what happened. And if you risk too much on day one and day two, well, you shouldn't be doing that the next time around. So you're going to be that much better off. But no doubt there's people that treat it as gambling and they might get an XFA closed and they might not learn from it and they might go replicate the same mistakes.
Right.
Traders shouldn't be here to gamble. Traders should be here to learn and not replicate the same mistakes. That's how, it can be fun trading. It can be exciting trading. But if you want to have a career in trading, you got to be managing your money, managing your emotions, psychology. And if you can't make tweaks from your previous learnings, you're going to have a very difficult time having success over time in this industry. It's
all about the growth. It's all about growth.
Yeah, cold hard truth. Performance-based business. You got to measure your performance.
All right, next question. Is it possible to make a living by trading? I mean, individual retail trader.
Yeah, absolutely. Absolutely. We've got a number of people here that did it, I guess on the professional side, but yes, it absolutely is. I'll tell you, as a retail trader, your best odds for success are to, and I'm going to continue hammering this every opportunity I get, money is made day trading, catching a piece of the trend for the day. I see a lot of people struggling when they're the scalpers that are in and out long and short throughout the day. For you retail traders out there, you might think you've got it. It might work for a while. You might have big winning days, and there's probably going to be people watching this saying, Mick doesn't know what he's talking about. I've seen a lot of traders, tens of thousands of traders, and the people that try and scalp long and short throughout the day are going to have a very difficult time being successful in this industry. But there are people that make livings doing this. There are people that make really good livings doing this. And then there's people that, my suggestion to anybody new in this industry, wanting to get into this industry, do make sure, and this was something that was very helpful for me, I had other sources of income when I was trading. Now, I started trading, got into it, did it full time, didn't have the other sources of income. It put an enormous amount of pressure on me to perform. It made me take trades that I shouldn't have been taking because I was chasing making money, and that only helped me lose more money. It was when I did have security outside of trading that I knew I could pay the bills, that I was able to be more patient and more selective with my trading. So I've heard from a number of traders, they get funding, oh, I'm going to quit my job. And I say, hold on, pump the brakes. Don't do that. Tiptoe in. If you are trading a live account, an express funded account where you're able to take payouts from, it's good to have the security because it takes so much pressure off your shoulders. People could very quickly find themselves in a bad position if they quit their day job per se. But, if you are able to make a certain amount of money compared to what you're making in a day job, and then you have a solid plan for scaling your trading, you can confidently make some estimates to, if I go from 1 lots and 2 lots to 3 lots and 4 lots, if I was only making half as much money day trading as I was in my full-time role, if I can scale that, then I'd be making the same amount of money. If I can scale that, then I'd be making more money, and so on and so forth. But do make sure that you're not putting your back against the wall, because poor trading comes from having your back against the wall.
Right. And a lot of folks are here chasing money, and one of the best traders I ever knew told me that that's the wrong way to do it. You have to become a good trading decision maker, and the money is a byproduct of that. And it kind of goes to the next question I have for you, Mick.
I use that quote all the time. Money is a byproduct of good trades. Seek out the good trades. The money will come.
Steve Prasnewski is the guy that told me that. So
I tell a lot of people that, Steve. Thank you.
Yeah. And so you were talking about, people getting their funded account saying, I'm going to quit my job. I mean, I kept my job outside of trading for years. Even when I started making money, I kept it for years just so that I knew the bills were going to get paid. I didn't have that pressure. The next question, I think, is something that would kind of help somebody in that regard. This question is, I'm wondering how to become more disciplined to take A setups only, and how to develop the patience to wait for this setup. Thanks. And if you're chasing money, you're going to have a hard time having that patience. Mick, what are your thoughts on this?
Well, I touched on this in my shoulder tap segment yesterday about, you should only be taking grade A setups. There's no such thing as a B setup, a C setup. That stuff's all shit. Find the grade A setup, excuse my language. If you find yourself over trading, or you're taking marginal trade opportunities, you can do a little homework, and if you can note down, this was a grade A setup, and then for every grade A setup, what was your performance and outcome? You have some statistics that you can compare to the grade B setups or the C setups and see what that performance is. Now, the discipline, I mentioned it also yesterday, people underestimate the amount of discipline you have to be successful in this business. There's a massive difference between doing what you should be doing and doing what you want to do. Markets are open 23 hours a day. I want to trade all day. Well, yeah, that's what you want to do. But if your goal here is to make money and via good trades, then you're going to be more selective with your trading. You're going to go long on pullbacks. You're going to go short on little rallies in line with the direction of the trend. And if you're over trading, come up with a number. If you're making 20 trades a day, try making 10 trades a day. If you're in a cold streak and you're finding yourself losing money multiple days during the week, implementing the same strategy across the markets, tell yourself 1 trade a day. It's going to be super hard to do if you're an over trader. Challenge yourself. Say, I get 1 trade a day. I was talking about it with Hogan Andre yesterday regarding what you should be aiming for as a winning trade percentage. Successful traders can be right 50% of the time, but nobody's goal is to be right half the time. Your goal needs to be, I want to have a 100% win rate. It will not happen. You will not have a 100% win rate over time. Maybe in a day, if you're taking one trade, yeah, I have one winning trade. I'm at 100% win rate.
Right.
That's your goal. If you're shooting for perfection, you're going to come that much closer to perfection than you are if you're, throwing spaghetti at the wall. Another thing I would say is if you're going to take a trade, you should be able to explain to someone, an accountability buddy, a coach, somebody, I like this long trade. This is why, and give a couple reasons for it. You can't just say, I like being long here. That's
Right.
BS. Like, why do you like being long there? Have not one reason, have multiple reasons. I like to say, if I'm looking at my charts or something, because I like technicals, I like seeing a few stars aligning to give me, green light go and taking that action. So, limit yourself to how many trades you're making. It's not easy to do. It's way easier said than done. But, you got to make a decision. Do I want to do this half-assed, or do I want to be successful in doing this? Ron Swanson said, for those of you Parks and Rec people out there, I got a mug that this got this quote on it: never half-ass, more than one thing, always whole-ass one thing. Otherwise, you're wasting your time. It's entertainment, it's gambling, so don't waste your time if you want to be good in this industry.
You already answered one of the questions, which was about how, controlling over trading. Maybe I can add a little something.
I know you can.
If you're over trading, where does that switch flip? Where does your switch flip? Where do you become emotional? For me, it's 3 losing trades. If I have 3 straight losing trades, then I'm probably going to stop, because that's when I start to overtrade and start to trade chasing money instead of strategy. You kind of keep an eye on that and account for when that happens for you, and you can help control your overtrading. Next question, Mick.
Really, really quickly, I'd say the trade reports are great assets for that. If I look at a trade report and I see John Hoagland has got a certain type of trading activity, he's doing X amount of contracts or X amount of trades in a day. On the days that I see a P&L low being relatively low, I always see more contracts for that day or more trades for that day. If you're down money, psychologically, it's only natural to want to trade more to make that money back.
Right.
And usually, for myself, for what I've seen from other traders, you just dig yourself in a deeper hole. It's commonly discussed, you remember the 1 or 2 times out of 10 that you are able to get back to break even or even profitable on the day, which makes it very easy to forget about the 8 other times or 9 other times that you just lost more money.
Right.
And for me, one of my problems was when I was down good money, I would say to myself early on, I want to make it back. If I slap on more leverage, then I can make it back quicker. And F it, what's another $2,000? Boom, do what I'm doing, lose that $2,000, and then I'm just pissed off the rest of the day and know that I made a mistake.
A boo-boo.
When you're down money, the value of the dollar diminished. At least it does for me. It's like, oh, what's another?
We're already down. What's a few thousand more, right?
Yeah, I'm already here pissed off. I'm already down money. What's another shot? What's
Misery
another shot?
Company.
You got to get away from that.
Right. All right. On a 50K combine, what would be your self-imposed daily loss limit? And also, would you recommend a daily profit goal and stop trading when you get there? If yes, what would your daily profit goal be in a 50K combine?
So this is a great question. It's a tough one, though, because it's not a one-size-fits-all answer. Whether you're in a 50K combine or 150K combine, your strategy is going to really play a big part in the answers to these questions. Am I doing short time frame stuff where I'm holding for, 5, 10, 15 minutes? I'm in and out quickly. If you're doing that, your risk should be really smaller on a per trade basis. If you're looking to take a bite out of the trend for the day, you're going to risk a little bit more. And it comes down to contract sizing too. I could be in a 50K live account with 40 grand in it. I got $1,000 daily loss limit. It all depends on what contract sizing you're trading and So that's a tough one. I can't slap a number to that, but when in doubt, it's always good to think about it this way. You know, if you've got in the 50K a $2,000 max loss limit, that's your drawdown. You know, 10% of that's 200. $400 is 20% of that. Now that's a big percentage of your account to risk. We know how easy it is to make or lose $1,000 trading a one lot in the NASDAQ or the S&P. So these are things you need to consider. And you know, if I'm going to risk $500 a day on that 50K account with a 2,000 max loss limit, you know, every day I lose 500, it's a quarter of my trading account. So if I go right off the bat, I'm okay risking 500, 4 swings at the plate right there. And I've had 4 losing days in a row. John, you've had 4 losing days in a row. Everybody's had 4 losing days in a row.
Never.
What? You're lying. You're lying. You know, do you want to position yourself to, you know, lose your account after 4 days? I don't think so. So, you know, it's really a personal preference, and it's highly contingent upon the strategy you're implementing.
Right. Great answer. I was really interested in hearing what you had to say about that. The one thing is, you know, a daily loss limit should be static. It should be solid. As far as a daily profit goal, I find that there's a little bit of danger in that. You know, if you're 2 ticks from your daily profit goal, that's close enough. And you know, if you're going to stop at a daily profit goal, you may be limiting continuing profiting throughout the day. You know, once you get to that goal or close to it, how about saying, you know, my next losing trade, I'm done.
Yeah.
If you have another winning trade, it buys you another trade. If you have another winning trade, it buys you another trade. Your first losing trade, once you get to a certain level, then you can call it. I mean, there's a million ways to, as they say, skin a cat. But the time-based and financially based goals that traders put on themselves, I find tend to have the opposite reaction. Yeah. If you don't get to it, you feel like you're failing, but still you had a good day. So you got to get those 2 ticks. And if that's a loss, now you're chasing that loss and you're chasing the next loss. I've had, you know, days when I was trying to make 40 ticks and I'd be up 38 ticks. Let me just make these last couple of ticks and we'll call it a day. Famous last words.
You never get them.
Never get them.
And you give them back.
And you end up giving it all back, and sometimes even and then some. So keep your like profit and time-based goals very soft.
Yeah.
Sometimes the market isn't going to be big enough to get you there.
I don't, and I agree with everything John said. To elaborate a little bit or just add to it, I don't like profit goals for the day. I don't like them for a number of reasons. What I profit per trade is going to be contingent on the trade that I make. Not every trader, if you're looking at the market and you're looking for levels and areas of opportunity, it's not always going to be, I'm going to risk 500 to make 1,000 on every single trade. You could risk 500 to make 500. You could risk 500 to make 5,000. So your profit goals should be contingent on, you know, if you're framing out a trade, this is where I'm out if I'm wrong, this is where I'm out if I'm right. My profit goal would probably be to wherever I think the market can go, where I'm going to be right. And that's not to say there's nothing wrong with, you know, I've traded for 5 hours this morning and, you know, I'm up $1,000 and you know what? I'm tired. I'm happy walking away up 1,000. That's fine. Or I'm up $1,000 and hey, I'm sitting here. I'm looking for more opportunities. I'm not seeing them. Then you don't put another trade on and you're up 1,000 on the day. That's what you walk away with. One slippery slope with profit targets for the day is I talk to a lot of excited traders who are newly funded, be it in the express funded account or the live account, and they have this big goal in their trading career, this big aspiration, and they say, okay, in order to get to this number on the year or something, I need to average X amount of P&L per day. I talk to a lot of traders that say I want to average $5,000 a day winning. It always scares the shit out of me, because if you're trading to make $5,000 a day, if you say I'm going to make $1,000 a day on average, if you're trading to make $1,000 a day, odds are you're going to lose that much money every day, because then you start coming into trading your P&L and not trading what you see in the markets. And we just talked about how P&L is a byproduct of good trades. So I always get spooked to no other when I hear people say I'm going to average this, and in the back of my mind, you know, I'm not a mean guy, but I'm like, chances are this person, this guy or this gal, they're going to, you know, lose that much on their days. And I never see those trading accounts last all that long.
Okay, thanks, Mick. I love this next question, and I'm really fascinated to hear your thoughts on this. If the trading combine had a $300 to $500 daily loss limit, do you think we would have more traders in the XFA and live?
Mm-hmm. Yeah, I absolutely do. I absolutely do. If you're limiting your risk while still giving yourself opportunity to take down big numbers, 100%. 100%. You know, we talk about a couple guys in shoulder tap every week, you know, some of the big swinging traders, guys that are taking big 10-figure days down regularly. They've got their $3,000 daily loss limits. Losing $3,000's, you know, quite a bit of money tangibly, but when you're putting up large size, it's okay to risk. You know, it's all relative. I might have a $40,000 winning day or $60,000 day, but then I'm only losing $3,000. You know, it's going to take a lot of losing days to wipe out those profits. And same thing for someone who, you know, we always preach personal loss limit. We have our standard loss limit sizes, but we want to give traders room to, you know, risk and develop and learn. But like, most traders should have their own personal loss limit. If I got $1,000 loss limit, but I know my pain tolerance and I get emotional when I'm down 400, that's your personal loss limit. And, you know, do the math. You know, if I can save myself $400 twice a week, that's $800 at the end of the week. And over the course of a month, you know, that could be $3,200. And then you just do the math. It just adds up and compounds. Right. So
right. The less you lose, the more you make.
Yeah. Yeah. I love seeing some of my traders in the live accounts that, you know, they might make 4-figure winning days regularly on their winning days, but then they literally stop when they're down 400. That's impressive.
Yeah.
Having the ability to risk more, but having the discipline
to not.
Discipline, baby.
Yep. All right. Great answer, Mick. Thank you.
That's a great question.
Here's a deep dive for you.
Okay.
I know a lot of people have had questions about this. And what is your criteria for a trader that is on the XFA to move into a live account? Is it risk to reward, length in the account, P&L, combination?
Anything and everything. We are turning over every rock and stone, looking at past history, looking at current history, looking at risk, position sizing, win rates. A lot of the statistics we talk about on the shoulder tap segment, and we have shared trader success metrics. I don't know how quickly or readily available they are, but I put together a table with a pretty good sample size of people that we've called up to live, and you know what their winning day percentages are, what their winning trade percentages are, how much time they spend in trades, how many trades a day that they make. The more selective you are, the better your win rates are going to be, and the better your win rates, the better your winning day percentages. I talk about it being difficult to scalp, getting long and short throughout the day. You know, people that catch a piece of the trend for the day, I don't care if it's 20 ticks out of a 100-point move, you know, that's catching a piece of the trend for the day. They usually have a little bit longer holding times. So those are a few things, I think about, but we look at everything. I mean, honestly, we look at resets too. Like, a reset is kind of, there's a lot of people that will swing for the fences, and if they have a big winning day, great. They're that much closer to their profit target. If they have a losing day, or they hit their max loss, or they put themselves in a bad position and they reset, they're bailing themselves out to start a new account. And we want to be calling up traders to the live account that are going to be able to stand on their own two legs and take money out of the markets. Someone who's doing a lot of resets, we have less. The odds are not as good that they will maintain and thrive in a live account. So that's something we look at. We look at everything. We want to pick the best of the best.
Awesome. Thank you. Great answer. Here's another one for you. How do you deal with the desire to be in a position, even if there's not a clear trade available?
I used to have that problem when I had pressure on my shoulders to, take trades, hoping I'd make money to pay the bills. I'm not there. I am way more content taking, a handful of trades a year, to be honest with you guys and gals. I don't have a problem with that. Many people do. Personality types weigh in greatly to that. I can be fiery, but I'm a pretty calm, collected guy, and I don't have FOMO. I've tried to force things in the markets enough where I know it doesn't work, and I've learned from those mistakes. So I don't have a problem not participating if I don't see anything. My job, everybody's number one job in this industry is preserve your capital first, then find good trade opportunities where you get the profits as a byproduct. And if I don't see a good trade opportunity, I'm not risking my money. I'm managing my risk. And if it's risky to put on something marginal just because I want to, this could be a scary business for someone with that mentality. You might find short-term success, but if you're seeking action and excitement and not capital preservation and profits from good trades, you got something you got to work on. And we all have stuff to work on. So that's not calling out anybody who sent that question. And you always have to be getting better. Elon Musk says, if you're not progressing, you're regressing. My second quote of the day: brilliant billionaire versus a fictional character on a comedy show.
One of the things that that comes to me is, if you're here, you're a trader. And if you're going to be a trader, you damn well better be trading. And it's just not the case. Not having a position is as much as having a position. So you don't get yourself wrapped up in the idea that if I'm going to be a trader, I damn well better be trading. You almost feel perhaps a little bit like you're wasting time, like you're sloughing off at your job if you're not actively trading. And it's not true. It's not true. Find yourself something to distract yourself. Find your, just be patient. Part of trading is the boring part of waiting for alignment with the market and your strategy. If it doesn't align, you can't play. You can't play. It's just not, maybe you'll get lucky and, maybe you won't.
It's not your job to be trading just because the markets are open 23 hours a day. It's your job to preserve your capital and try and take money out of the markets. John, I know you played the guitar, when it was downtime. I watched a lot of Netflix and South Park to keep me busy while I was, watching charts, waiting for things to get to certain levels to take opportunities, because I had bad homework at the end of today's, Tuesday. At the end of today's session, you should be doing your homework, prepping for tomorrow. So when tomorrow's session starts unfolding and the price action's happening, I'm not there thinking about, what do I do because the market's doing this? I'm there waiting for the market to do X or Y because I have a plan of what I want to execute if and when that happens. And if that doesn't happen, I'm not doing anything. Because I'm not here to lose money by taking unnecessary risks, and that's unnecessary risk.
And if the market doesn't align with anything, you don't see anything, you do a Cartman, and you say, screw you guys, I'm going home.
I'm going home.
All right. TopStep X does have VWAP feature available, just to answer that question. Sorry.
This is a little less about, I know you had an answer for that. It was a question submitted. This is less about TopStep X and more about risk management.
Right. So based on your experience, do you believe that trading prior to traditional New York market open at 9:30 Eastern AM is advisable? Please explain
100%.
your reasoning.
100%.
Spelling counts, grammar counts. I'd also like to ask, based on your years of experience, what do you find the institutional traders to be doing, and go in depth in regards? This is a pretty deep. First off, let's do the first question.
Let's do part A. So
yes,
starting trading prior to the New York session, 9:30 a.m. when stocks open, 8:30 a.m. Central Time when it's Chicago time and stocks open. 100%. I think as a day trader, as a retail trader, your best time to be involved in the markets, and all these overnight traders are going to say Mick doesn't know what he's talking about, but from my experience, what I've seen, I see people get their pockets picked in the overnight session. You want to be participating. We're all small fish. Even if you're a big trader, you're still a small fish in the scheme of the things with marketplace. You want to be participating when the volume is there. Volume, if you look at your charts, you'll see that around the 7 a.m. Central Time, 8 o'clock Eastern Time, that's when volume comes in. And I think that 7 a.m. Central window to 11 a.m. Central window is the best time of day for the volume. Come 11 Central, it's 12 o'clock in New York. The big girls and boys are off to lunch. Then Chicago's going to be off to lunch. So the larger institutions that can be aggressive enough and trading big enough to move the markets around. Remember, we're just here as day traders, retail traders, riding the coattails of the big girls and boys that do push the markets around. We want to find good entries and let them move the markets, because, you know, I could bang around on S&Ps doing 100 lots all day long. I'm not pushing the market anywhere. I might chew up a bidder offer here and there, but you know, that's the best time window. It's when volume is there, and I don't like participating when volume is not there.
Yeah, don't do that with the 100 lot thing. I've tried it. It doesn't go well.
I've done it before too. We could talk about my biggest loss if we wanted to do that.
Well, I think you kind of answered the other part of that question is, you know, where the institutionals going, or where, you know, what are they doing during lunchtime? They're having a 2 martini lunch, right?
If they're having a good day, maybe.
Well, Mick, we're kind of running short on time here a little bit, and I could, you know, as we know, you and we could sit and talk for hours and hours and hours and hours and hours about all of this,
sure,
because we have done that with rum and without rum. So we're going to keep some more of these questions. This is a segment I think we should continue to do from time to time. I know, Mick, you'd certainly be down for it. I know 100%. Everybody that was here enjoyed your questions, and you know how honest, forthright, and you know, right you are. And there's so many different ways to skin a cat at this. And you get the opportunity to be in that seat, to see thousands and thousands of traders over the years, and their performance and what helps and what doesn't. And really appreciate you taking the time to be with us today.
Yeah, thank you, John. Definitely sitting down with the best, and one of the best risk-minded people we have here, with more experience than most, and I know we see eye to eye on a lot of things. So you know, for everybody that was watching, thanks for submitting the questions. Thanks for watching, and you know, I think talking about risk management and hearing about what has worked for, you know, worked or hasn't worked for certain people, and being able to share that, it's really free advice, especially on the what doesn't work that great for people, because these are lessons that, you know, some people might not learn without figuring them out themselves, but if you kind of, you know, have any inclination to learn from just someone sharing on wisdom via word without having to lived those experiences and those negative times, you're going to save yourself some money doing that.
Man, I wish I had somebody to help me with that wisdom. I did to a degree, my dad, but he always let me fall on my face, and then he would say, well, that's the way you learn, kid.
Same.
You know, so it's just wonderful that you're here, and you know, again, you know, we're looking forward to everybody's success here. I think a lot more people could be more successful if they would just let them be accountable, so that when you review your trading day, you traded in strategy, so you can get a real view of how your strategy performed that day. If you're all over the place and trading outside your strategy, you don't get anything consistent to review. And you know, Mick, I'm looking forward to seeing you back here again. I hope I get to do the interview again, because I miss you, man. I don't get to see you. We used to hang out all the time.
I know, we used to sit right next to each other in the old office. You know, I miss you too, man. Love you, John. And this was fun. I'd love to sit down with you again. If you haven't picked up on it, it's a topic I'm super passionate about. I'm super passionate about helping people, and I'm an open book too. You know, I can share my screw ups, and I was very good at screwing things up and making mistakes, very good at learning from them after a certain point, because, you know, you get upset, you get pissed off. Hey, I can't do that again. Or, you know, and you need to make a decision. Am I doing this as a business? Is this a business decision, or is this just entertainment for me with your trading? And that's something that a lot of people on the retail side of things need to answer for themselves.
All right. Excellent. Mick, I'm going to see you later. You know that, right?
Supper Club tonight. It's going to be a good one.
Looking forward to it.
Looking forward to it.
See you then. Blessings, everybody. Get ready for the top quiz, and then group coaching after that. And we'll see you later on. Mick, love you, buddy. We'll see you soon.
Love you too, John.
Best
See you later. Thanks, everyone.
Hello, everybody. Welcome to Top Quiz today. I'm Jack, and I'm joined by Alyssa. Alyssa, besides the stoplight they're putting upside your place, how you doing?
I'm doing pretty well besides that, Jack. How are you?
I'm doing excellent. Besides, Comcast really threw a number at me, so I had to come into the office at the last second. So that was fun. But I'm here with Mick, and I think we're all getting dinner tonight. Hogue and you as well.
Yes,
Exciting
yes, we are.
stuff. Anyway, so a few questions about how this works. You're going to get 4 multiple choice questions. Either go to kahoot.it and enter that pin, or easier, which is always good, you can click on that link that is pinned in the YouTube chat. Enter your information. There's a delay between me and Alyssa having this conversation of about 6 seconds until you see it. So you're going to look at your device, and when the questions pop up there, that's when you want to do it. And let me give it a couple other few ones because some people have been confused about this. There are 4 questions. If you get 3 or 4 right, you will be entered into a random draw, of which I'm feeling nice today, so we'll give out 20 combines. Sorry, 20 resets. Yeah. Also, only enter once. I won't be able to catch you every time, but we see who uses the code, so if you enter more than once into this, don't do it. Trust me. So, Alyssa, how are you feeling about the questions today?
I'm a little out of practice, so we'll see how it goes, but I'm feeling pretty good.
Right on. Well, nobody's gotten perfect yet, but today might be the first. And by that, I mean the guests. A couple will be trading questions. A couple might be something else, but I've tried to make them available to a wide number of backgrounds, so I think we'll be cool.
All right, sounds good.
Okay, look, and we got War Eagle, Rehab. I got Mick behind me, crinkling water bottles. Bad at trading. This is Jim, Alexando, who will be last in here because we got to get this started shortly so that we can get to group coaching right after. Okay, I'm going to turn this off in about, I'll leave a few more. Got to have Kyle in there and David CT. Remember, we want to see, we don't want any 2-letter usernames. Those are boring. Give me something good. It's also, yep, talking to you, JY. Zoe. Fred Decker, we know him. Okay. Okay, here we go. Oh, and also, just a housekeeping note. I will email you if you win. If you think you won but did not get the email, you probably didn't or didn't enter the right name. Just remember, it's a random drawing from people who get 3 or 4 right. I cannot emphasize that enough. Okay, you ready to do this, Alyssa?
I'm ready, Jack.
Okay, with that, we will begin. Welcome to Kahoot. Today is Tuesday. Good thing to remember.
It is.
Okay, here we go. Question number 1. The price difference between the best bid and the best offer in a product is called the gap, the spread, the delta, or the twilight zone.
I love the twilight zone. Is it the gap, Jack?
Well, Alyssa, it I suppose could be a gap, but it is actually the spread is the answer we are looking for here. And also, please do not just, they're saying reset. Okay, cool. I thought people were just commenting reset, as in, can I have a reset? You might, if you get 3 or 4 right. All right, Alyssa. Remember, the scoreboard, cannot emphasize enough. This is just for bragging rights. AMP, my buddy, Risky Mickey, like that.
Ooh.
Good to go, and J Steel 77. All righty. Let's go to question number 2. The largest bank in the world, measured by assets under management, is located in what country? Is that country China, the United States, Saudi Arabia, or Switzerland?
This is a question. It is one that you asked. It is probably Saudi Arabia.
It is China. As a matter of fact. Yes, indeed. Assets under management. It is in China. Someone says
Okay.
North Korea in there. It is not North Korea. It is China. This was a good question here. I do say so myself.
Yeah. Pat yourself on the back.
Tip Top Step. I love this username. Tip Top Stepper. Big Bid Club, Big Fly, Black Swan, and Knowing Iguana. No, that's not L. Knowing Iguana. That's pretty good too. All right. Let's take a look at question number 3, shall we? The construction disappeared outside your place.
Thank goodness. Hopefully they're going on lunch.
Oh, yeah. Well, wish I could do that. But then there'd be no quiz. The volume traded on the bid price minus the volume traded at the ask price is known as what? Slippage, theta, cumulative delta, or excess?
These all sound like fraternities, so I'm pretty stumped. It's probably the cumulative delta, right?
It sure as heck is. Yeah, there's a lot of Greek letters in finance. The theta is the time decay in options. Slippage is when you don't get the order you want and slips through the ladder.
That would make sense.
Yeah, so let's see. Looks like a number of people got it. Hogue talks about this quite a bit, looking for his delta divergence. All right. Oh,
Thank you,
no,
Hogue.
Tip Top Stepper's gone.
Oh no.
All right. Big Bid Club, Knowing Iguana, Plutarch, Fly, Black Swan. Let's do one final question. You're 2 for 3?
I am 1 for 3,
Okay.
but we can go with 2 for 3.
Yeah. If it says, I don't think you clicked on Delta and got it wrong unless there's something with the system. Make sure you're watching this live too, by the way. I feel sometimes people aren't watching it live. Okay. You ready?
I'm ready, Jack.
Okay. Last question. What is the only planet not named after a god? Is it Uranus? Because I'm not going to say the other way to say it. Jupiter, Earth, or Mars?
Earth? Question mark.
Yes, it is indeed Earth. As Caleb says, where we live.
Right.
That is 100% correct. All right. So, once again, I have to preface this each time for bragging rights. These are the winners because I will send out emails to the random winners later. Okay. Black Swan in 3rd. Congratulations to McFly in 2nd. I think the last question was kind of easy, so it'll probably be my good friend, Big Bid Club.
Woohoo!
Big Biddy. All right. Very nice playing with you today, Alyssa.
Thank you.
I'll see you later. Looking forward to seeing everyone in person.
Yeah, can't wait.
And once again, if you got 3 or 4 right, you are in the drawing. And I will email those people later this afternoon. So in the meantime, stay tuned because we got group coaching coming up with Coach Paul, I believe. I got so many windows open right now. This is riveting TV. I look at my spreadsheet. Should have known this. Yes, Eddie and Coach Paul will be on to do group coaching. Won't want to miss that. We'll have another quiz tomorrow. Best of luck to all of you. See you soon.
Well, we're back as promised, and we are here with our good friend Coach Paul for group coaching. Hello, Coach Paul.
Hello, Coach Eddie. How you doing today?
I'm okay. For a Tuesday, nice, beautiful day outside here in Chicago. Where are you located?
Today, I am outside Cleveland, Ohio, with my son.
Oh, all right.
Helping him work on his house for the week.
Nice. You're a good dad.
Beautiful area.
Good dad.
Fall leaves.
Oh, it's beautiful. I tell you, that's what I like about it, the color of the season.
Yeah.
Leave the windows open a little bit. I got my long sleeve Topstep shirt on today, so
I got to get one of those. You're styling and profiling there. Wow.
These are nice. I like these.
But, I like that.
Today, my friends, Romans and countrymen and women, we've got a topic, the history of technical analysis. And I was intrigued by the title and topic that Coach Paul put out there. And I'm ready to hear what you've got to offer. And by all means, if you do have questions, post those in the YouTube chat. And Coach Paul, I'm going to move away from this podium and give you the microphone.
All right. Thanks, Coach Eddie. Today, we're going to talk about the history of technical analysis. And I think, first of all, people have or I did, had the assumption that technical analysis is relatively new. And it started with stocks in the beginning of the 19th century. And I couldn't have been more wrong. So there was a, we'll begin with this. What is technical analysis, first of all? Technical analysis is the forecasting of prices based on patterns in past market data. Number one, technical analysis is a widely used method in futures trading and other financial markets. It involves the study of historical and volume data to make predictions about future price movements. Number two, traders who use technical analysis, often referred to as technicians or chartists, believe that historical price patterns and market trends can provide valuable information to help them make trading decisions, which is most of the people I know who are traders. Often this is asked, what is the difference between technical analysis and quantitative analysis? Okay, technical analysis is primarily subjective. It involves historical price charts, patterns, and indicators to make predictions about future price movement. Quantitative analysis is more objective and data-driven. It involves the use of mathematical and statistical models to analyze historic and real-time data. Key is it seeks to identify patterns and relationships in data. So chartists would be technical analysts. Computer-driven data is quantitative, looking for relationships and just in the data, not in the price. Something I learned. It was kind of a fuzzy area for me, but that's the difference. So now we know. Okay, so we'll begin in the history of technical analysis. And I'll start with a quote by William Getzman, professor of finance and management studies at Yale University School of Management. The urge to find order in the chaos of market prices is as old as civilization itself. So that's where we'll begin. Ancient Mesopotamia. Yes.
Wow.
Yeah. So in the 24th century BC, Sargon the Great established the first Mesopotamian empire with its capital at Akkad, and with the city's temple serving as the center of economic life. The merchant of that time officially worked for the temple and pursued his private entrepreneurial activities on the side. Ancient Assyrians and Babylonians kept track of commodity prices on clay tablets. So the original trading card kept on clay tablets, which are available to this day, which I know that I've heard W.D. Gann of the famous Gann analysis actually studied these prices of the clay tablets. So in the 5th century BC, trading evolved to the point of a profession. A trader acted as a middleman or a broker and dealt in products he did not produce. It was under such conditions that technical analysis came into being. The basic unit of money was the shekel of silver, and prices were quoted as the amount of commodity 1 shekel could buy. Continuously, yes, interesting. I myself picture Fred Flintstone and Barney trading Brontosaurus futures and checking the prices. We could go on, but yes. So one of the key points here is in technical analysis is you have to have a database. So you have to have confirmed prices that are documented. The ancient Assyrians and Babylonians documented all of the prices in clay tablets that have survived to this day. Once you can get that, you have a database, you can analyze prices. You can begin technical analysis. So continuously throughout the centuries, the prices of 6 main commodities, barley, dates, mustard, cardamom, sesame, and wool, were documented. So once again, the commodities bring upon technical analysis over 5,000 years ago. Prices were charted regularly so that fluctuations could be noted for each month of the year. When volatility of prices increased, prices would be quoted in shorter time frames, such as the beginning, middle, and end of the month, ranges of days, or even daily. So shorter time frames, this all sounds familiar, doesn't it?
Yep.
And when fluctuations became even more volatile, the smallest changes would be charted. For example, some days prices may be reported in the morning and the afternoon. Ancient Babylonians not only charted their markets, but also sought to forecast future prices based on the observed ones, just as modern technicians would do. Any questions or comments?
Hey, post your questions here in the chat. Brad said he remembers technical analysis as a part of his financial analysis course in college back in the mid 80s. Well, I mean, it's come a long way from Mesopotamia to College U, and it's just something that we've sort of kept with us throughout the age of time, and still using it, probably in its best form ever.
It's true. I remember. So I started in 1980, and
started doing what, Paul?
Started
doing what? What were you doing in 1980, there, buddy boy?
I started in the business on the floor of the exchange in 1980, and charts were still in a raw stage. Most traders, floor traders, a matter of fact, when I started looking at them, an older trader came to me, goes, son, there's a chart on every boat on the bottom of the sea. And it's just, he didn't believe in it. And he didn't need technical analysis. He was a local. He was trying to buy 7s and sell 8s. Anything outside of that, he had no need for. But one of the things he ignored is that, there are charts at the bottom of the sea on boats, but he ignored the thousands, tens of thousands of boats that made it safely to harbor using charts. So charting has come a long way since I started in 1980. You might even remember all our charts were done by hand. Until CQG came around, even when Market Profile started, we'd do it by hand. Everybody,
I'd walk around
I'd
walk around and see these people with the graphic sheets, coloring in each one. And I'd be like, oh my God, it's monotonous. I'd go crazy. And the thing is though, Paul, too, they had a watch all the time. They can't be like talking to this guy over here. Hey, what's going on? Oh my goodness.
Yes, it's true.
It was, something that, Stottlemyre, they were doing that. I remember that was probably one of the first ones I saw on the trading floor, as far as graphing anything technical.
Yeah, because we couldn't do 5-minute charts.
Yeah.
Couldn't do it. You needed a computer to keep it up all that time. And you're right, because I was a time and sales pit clerk. I was the pit reporter. So all the trades had to come through me. And then I'd have, it was traders, when they made a trade, they had a hand in their cards every half an hour. And every half an hour had a letter attached to it. So the first one was A. That was, and so that was a little easier to keep track of because the market profile guys would run to me when I was a time sales clerk. What was that trade at this time? So all of that was hard to keep up with. And this is before the advent of the personal computer. So we'll go to the next ancient market, ancient Greece. Ancient Greece, during the Hellenistic age, the art of speculation flourished. Speculators would often try to limit production of supplies and impose their own prices. As old as man. The popularity of speculation led to the development of methods for technical analysis. Athenian merchants knew that information was crucial and devised their own manuals, which provided information about products sold in countries along the route to India and the attitudes of their rulers. Information. Adaptive traders also coveted timely news, and combining news with data on price fluctuations would change their strategies rapidly. Different time frames, different news, the market structure is changing. Athenian traders made inferences about market sentiments to try and predict future prices and to determine how much of a given commodity to buy and hold. To assess changes in sentiment, just as modern technical analysis would do, Athenians used prices. Their best indicator was probably from the price level on the agora, which might fluctuate in response to rumors and changes in sentiment. For those of you who have done crossword puzzles, agora is an ancient Greek market. And once again, the part is documenting prices in a common marketplace where you could get prices that are consistent and also documented.
You know, Paul, I'm sure that they had something to go by supply and demand, you know, also to figure in with these technical analysis that they had. But, you know, it's somebody over there started to put numbers together and started to realize what works better than what other things work, and use it to their advantage.
That's a great point, Eddie, because as we've talked before and in our classes, if you're going to trade and use technical analysis, use something that you're comfortable with. And your point to, yes, someone figured out, hey, there's some pattern to this. Prices are rising. Something is coming. I'm getting information. And used it to their advantage, but they have to be comfortable in the information.
Right.
So next part, we're going to go to zoom back to Japan. Japan and the first known futures exchange, which is fascinating history. The development of technical analysis in Japan was closely related to the emergence of the country's rice exchanges. General Hideyoshi Toyotomi, in his quest to replace the money market with a rice market, invited merchants to Osaka, causing Osaka's population to grow from 70,000 to 170,000. This increase brought on an unexpected rice shortage, and at Hideyoshi's request, local lords from many different parts of Japan had to send rice to Osaka. The incoming rice first had to be graded and based on its quality and then distributed. This gave rise to a rice market, which was set up in the yard of Hideyoshi's war merchant, Yodoyo Kian. Another important part here is a marketplace that buyers and sellers could come together, document prices, and disseminate prices. It was known, and by the way, this is the first part of it was graded. So the rice, you just couldn't bring any rice. You had to have a specific quality of rice that met standards. So this set up the first rice exchange. The demand and supply of rice at Yodoya's Yard Rice Exchange eventually became the Dojima Rice Exchange. 1710 saw the introduction of rice futures contracts, which became a huge part of the national economy. Once again, marketplace, standardized contracts, documented prices, disseminated that you could rely on. This is where it price changed hands at this date. Once you can have a good database, if anybody's done any back testing knows, your output is only as good as the data you feed it. Good, reliable data is the foundation of technical analysis. So in 1724, one of the greatest speculators of all time, Manihisa Homa, was born. In 1750, he gained control of the family business and began trading at the Sakata Rice Exchange. Homa's writings are treasured by traders and historians alike, not only for their wisdom, but also because they represent the rare documentation of early Japanese technical analysis. I had never heard of him until I did this, until I studied this.
No, I mean it's opening up a lot of questions, you know, especially from Japan. I mean, you know, they're very pattern based. They're very math based.
Yes.
And just how they use this is incredible.
Yes, and Homa's writings bear a close resemblance to those of Charles Dow of the Dow theory. This is fascinating too. Homa noticed that traders' emotions significantly influence the price of rice, and he concluded the psychological aspect of the market was critical to his trading success. Homa understood the importance of market information and its effect on crowd psychology and hence on prices. One of the fascinating things here is he set up a communication network, and it stands testimony to this. Homa was in the Sakata Exchange, which was like 40 kilometers away from Osaka. And he would post men on rooftops roughly 4 kilometers apart, forming a chain between Sakata and Osaka. And the men would exchange signals by waving flags. So if you've been on the trading floor and trading signals, and this was just fascinated me. And with that, they would get ahead of the market price information, and it was all documented. So he would get prices to document before others by using flags. It's fascinating.
I tell you, those 4 kilometers, those flags better have been huge. I'm lucky I can see 2 blocks down the street, let alone 4 kilometers, and some guy waving a flag telling me the price of corn.
7 bid.
Yeah, but you know, I tell you, technical analysis, you know, I mean, it's used by many of us, traders, investors, basically to predict future price movements stocks, forex, commodities. I even think that technical analysis is used in pricing homes and cars at some point.
Yeah,
I mean, it's a full circle, and it's used in just about everything that has a price that will fluctuate. Which is, I don't know if they do technical analysis on how much a Happy Meal costs, but I imagine that McDonald's has some sort of overall umbrella of technical analysis. That at McDonald's used to get any size drink for $1. They used to have the $1 cheeseburgers. Well, obviously, it's not there anymore. Everything has moved up in price. So there's some sort of formula, obviously, with each aspect of a fluctuating product price.
Well, it's funny you bring that up. Ray Dalio of Bridgewater, the largest fund manager, started off in the futures market, working technical analysis and data, and he worked with McDonald's, and he came up with a way to hedge chicken over time. And by the way, when I was in the grain room, they used to call chickens soybeans with wings, because they're fed mostly on soybeans. Meal.
Right.
And he came up with the way that McDonald's could hedge the price over time, and then they floated the chicken McNugget. Fascinating history.
Not a palatable thing if you see how it's made, but
no.
As a matter of fact, Tyson just recalled the dinosaur chicken fun nuggets because there's pieces of metal that children are spitting out to their parents. So they recalled like 30,000 pounds of these. So be careful if you got those in your freezer and you're feeding them to your kids. Stop.
I'll stick with the fries.
Stick with the fries. I tell you, anything nowadays is subject to something.
Errors do happen.
Yeah, I mean, the thing is too, for traders, does technical analysis help you trade? I mean, some of us use it religiously. Some of us sort of skim over it. Some of us don't even look for it. I'm one to sort of get that feel for, which way the market's moving. I like to use my dome. I like to get an idea. I call it who's winning the tug of war. To get in there, really close to see the nitty gritty of what traders are actually doing. And, the technical analysis is going to help you identify your trends. It's going to help you with pattern recognition, volume analysis. I know that I like my support and resistance levels. That's about all I really use. And, that's a technical too. But I'm not too fancy on figuring out where I'm putting my support and resistance levels. I sort of go with the default. That works for me.
Exactly. It gives you a visual and a way to analyze quickly, and with prices, where have they been, how have they acted. Once again, we say, know it, see what works for you,
right,
and get comfortable with it. So back to Japan. And after extensive studies on the price movements of commodities, including rice, along with his studies of weather and seasonal tendencies, Homa began to identify traits and patterns from these observations. He then made decisions based upon his studies. The fundamental theories and concepts behind Japanese candlesticks were conceived by Mr. Homa in 1750. So, it's funny how since I started in the business, and now 90% of people doing charts, technical charts, use candlesticks. When I started, no one knew about candlesticks. and whatever works for you. But yeah, this trader, Mr. Homa, developed this, and maybe a technical analysis really worked for him, because the results of his work enabled him to produce a very viable trading strategy. The method he created and used made him a very wealthy man, $10 billion in today's money. So rice trading, technical analysis, candlesticks came in the mid 1700s in Japan, which still carries over to today. The father of the Japanese candlestick. So next, we're going to come into the New World. The late 19th century, a technological revolution sweeps over financial and commodity markets. Sound familiar? Technology. So on November 15th, 1867, the first stock ticker is unveiled in New York. The advent of the ticker ultimately revolutionized the stock market and commodity markets by making up-to-the-minute prices available to investors and traders around the country. So big update. You could see, before that, they just relied on where it closed on at the end of the day. Now you could see it almost to the minute by reading the ticker. Also, the first telephone patent is granted to Alexander Graham Bell in 1876. Another huge revolution in trading technology. And in 1869, the telegraph system was available from coast to coast. So new technologies enabled traders to trade on a shorter time frame and trade more and have much quicker data of prices. These prices, once again, in a common marketplace that could be documented and disseminated, that people could chart and understand, and a much more reliable source of price data. These breakthroughs in communications made time shrink, transforming the way business was conducted on Wall Street and solidifying an ethos of impartial numerical representation of financial reality. This transformed market reality required permanent presence in the marketplace and constant vigilance, long study and careful examination of stock and commodity price movements. Market analysis became a full-time, skill-based profession. Technical analysis emerged as a respectable, bona fide profession, distinct from gambling. So around this time, this is where technical analysis, as we envision it, really takes hold with the revolution of technology, telephone, telegraph, stock ticker. It was much easier to get data and project and keep charts. So 1860s begins a new revolution, much like the revolution in the last 20 years. It's very, very similar. So we'll begin now with Charles Dow, the father of modern technical analysis. In 1896, the Dow Jones Industrial Average is published. And thanks to the contributions of Charles Dow, technical analysis evolved into a scientific endeavor, complete with data gathering, hypothesis testing, and mathematical rigor. In 1902, Dow theory is introduced. A defining element of this theory is the idea of a trend. As he quotes, "It is a bull period as long as the average of one high point exceeds that of previous high points. It is a bear period when the low point becomes lower than the previous low points, bear and bull markets, trends, comes from charting. And Dow argued that that market speculation is far removed from gambling. It is based on the perceptions of a stock's value and the underlying market movements. Dow viewed the stock market as a natural system and likened the averages to a measuring instrument. He quotes as, a person watching the tide come in and wishes to know the exact spot which marks the high tide, sets a stick in the sand at the points reached by the incoming waves until the stick reaches a position where the waves do not come up to it and finally recede enough to show the tide has turned. That's to me, that's very similar to talking of market movement. When is the high coming in? It's technical analysis from a natural system point of view.
Right. I mean, it requires some patience too. Like you mentioned, waiting for that tide to turn. You know, it's the thing is too, sometimes technicals don't work and you wonder why. You know, you do all your homework, you prepare yourself, your mindset's focused, you use your technical analysis, and sometimes the market just says, you know what, not going to go there today. You know, the thing is too, you don't get discouraged. You're doing what you're supposed to do, but you know, sometimes the stars just don't line up, and it's probably best to, instead of gambling and hoping that works, is just to, you know, set it down, done for the day. Things aren't matching up. I did all I can, and I'm not going to risk my account.
That's a great point. And then one thing I would go back to this is, yes, this technical analysis is not a foolproof method for making money. It's analysis to give you a way to understand the movements of prices through time. Like in this method where, you know, you're trying to measure the high tide, one of the things I learned is, you know, and I believe is, you'll know when the high is or the low is made after it's made. But that's the way I'll use technical analysis. Actually, in my theory is I should be long at the high. I'm trading well. I'm going with the trend. I got in the most trouble trying to predict the high myself, using, you know, I was stubborn, 1990s, late 90s, and the stock market just kept on going up, and I kept on selling it, and I got good at selling the high. And the problem was it kept on making new highs.
New highs. Yeah. Same here, bullhead in the 90s. You know, I thought I knew everything, or I thought I did.
Yeah.
And, you know, you get humbled really quick. You know, it's just a matter of accepting that and saying, all right. You're much bigger than I am, market. I'll follow you instead of you hoping to follow me.
Yes. And my analysis, my technical analysis, like I said, it's not foolproof. It's just, it's a history of price movement. What I learned, well, the biggest lesson I learned is don't fade the trend. So anyway, that's Charles Dow is the father of modern technical analysis. And from what we've learned, he leaned heavily upon Sukio Homa, the great Japanese speculator. Okay. New technical methods. The Dow theory creates new analysis. Richard Wyckoff develops the point and figure chart and the Wyckoff method. This method uses bar charts and point and figure charts to study supply and demand imbalances with the purpose of determining future price trends. Eddie, we talked about it when we started. Point and figure was done by a lot of floor traders. That was the modern equivalent to a 5-minute bar chart, but it measured supply and demand to see a series of X's and O's to see who was in control. technical analysis, and Richard Wyckoff. If you've never heard of Richard Wyckoff and the Wyckoff method, investigate it. You can learn a lot of valuable methods from this, and a good insight into trading. So the next one is Robert Rhea develops the theorem of Dow's three movements, defining three distinct and simultaneous movements of the Dow Jones average. The terms primary, secondary, and day-to-day movement are defined. The primary movements refer to major bull and bear markets. Secondary reaction refers to significant retracements in bull and bear markets. And day-to-day movements should be charted because they usually develop into a pattern of forecasting value. Today's modern daily chart. So the terms of bull market reactions, retracements are defined by Robert Rhea, who also is the teacher to the father of Elliott wave analysis. And this time, Rhea's notable theorems include determining the trend, which says that highs terminating above previous highs and lows indicate a bull market, while the inverse is bearish. And also the relation of volume to price movements theorem, according to which an overbought market sees light volume on rallies and heavier volume on declines, while the reverse is true for an oversold market. This is technical analysis language that is still used today. Okay, well, we're running quickly. Okay, chart patterns. Chart patterns were pioneered by a guy named Richard Schabacker. I'd never heard of him until I did this, and I've been studying this for decades. Richard Schabacker authored 3 highly influential books: Stock Market Theory and Practice in 1930, Technical Analysis and Market Profits, 1932, and Stock Market Profits in 1934. Edwards and McGee used Schabacker's writings and theories as a primary source for their book, Technical Analysis of Stock Trends, widely regarded as a primer for technical analysis instruction. It's a famous book, Edwards and McGee. Warren Buffett started with this book. I didn't know they took their theories and they borrowed it from Richard Schabacker. Most prominent among these patterns are the common basic formations indicating a major accumulation distribution. These include head and shoulder bottoms and tops, double bottoms and tops, complex bottoms and tops, broadening bottoms and tops were defined by Richard. There are also types of continuation triangles such as symmetrical, ascending and descending triangle, and other types of continuation formations such as ascending peak and descending bottom. In addition, Schabacker identified a number of miscellaneous formations. These include false moves, shakeouts, support points and resistance levels, and gaps. Terms that you hear to this day are formed. Important information in technical analysis. Okay, so we'll move to technical analysis today, from moving averages to market profile. Okay, price trends are the main tool of technical analysis. Quote, "The trend is your friend." Trends are analyzed using indicators which measure momentum and market extremes. An essential trend following device is the moving average, which is computed by averaging prices over a moving time window in an equally weighted or exponentially weighted manner. Moving averages smooth out spiky fluctuations of fine-grained market data to reveal overarching trends. Trend analysis, moving averages. When I started again in 1980, no one used moving averages because you had to compute that. It takes computing power, modern technology to keep it up to date. Okay, also in the early 1980s, John Bollinger proposed plotting the market extreme lines approximately 2 standard deviations rather than some fixed average above or below a moving average, a technique known as the Bollinger Band, very widely used in today's market analysis. In 1978, J. Wells Wilder introduced the Relative Strength Index, known as the RSI, in his book, New Concepts in Technical Trading Systems. By the way, it's a hard to find book, and you want to get a copy, it's thousands and thousands of dollars.
Really?
Yeah. To get an original. It's a collector's items. I remember technical analysis really started, as we know it today, really blossomed in the early 80s. And then with the onset of personal computers, it became much easier and much to keep this data. Again, a technical revolution spawned technical analysis to get deeper and more refined. And so the next one is Jared Apple develops the MACD, the moving average convergence divergence. It is modeled through the interaction of a faster signal, which is computed as the difference between 2 exponential moving averages, and a slower signal obtained by smoothing the faster signal with an exponential moving average. When the faster line crosses the slower one, a buy signal is generated, and vice versa. So widely used, very popular MACD. Without modern technology, my TI-80 Texas Instrument calculator, by the time I computed this, the market's already moved and I'm done. So again,
it's tough. I mean, you got to be quick. We were talking about that earlier with just trying to add up, and how you had a paper deck and working orders, and if the market ran 10, 20 ticks, you'd have to sort of leaf off your resting orders, fill them, and I mean it was a process. You had to really pay attention. You had to know how to add quick.
Yes, and cancel replays of the guy chasing the market were the boon to any again, right? So go ahead.
I was going to say it's funny because you mentioned cancel replays, which happened a lot, and it was usually a paper order. I remember, and still to this day, when I was running, and it was very busy, and the deck holder would have all these orders, and all the runners would be, if there was a certain run in the pit, let's just say the Swiss franc's moving, a lot of paper orders going in there, and all the runners would stand around, and they'd have the tickets, and they'd hold the orders. The deck holder would say, "Hold your order up," and you'd hold your order, where it would say, buy 10 at this price, blah, 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 and you'd hold it. And then they would cherry pick which ones they wanted, which were closer to the market. And, you'd still be standing there, and you're looking, you go, oh man, my paper order is way off the market. And then to cancel replaces, if they knew the account would be right on top here, if they saw that account with a cancel replace, they'd actually yell at you.
Yes.
What the hell? Why is it cancel? Which was, it's part of the business, but it wasn't anything personal. But you brought that up, and I remember being in the pit and watching this, and these new kids that are just starting out on the trading floor, you'd wink at them and you'd say, "Don't worry, don't take it personal. You'll be all right." So
that's awesome. We gotta go. We should do a session just on stories of the deck and things that would happen.
Man. There's a
It
lot
goes
of
actually technical analysis. When I started on my own deck, that was the deck management, but there were people would want to see the thickness of the buy deck versus the sell deck. So if there's resting orders, like a market is exhausted, you've gone through all the buy orders or sell orders, and there was only like 10 pieces of paper in your deck. That was valuable information to some local traders. Like the markets move through that paper. It's most likely exhausted, and it's got a chance of going the other way. So
right.
All right.
Well,
so
we're just about top of the hour. If you want to sort of wrap it up.
Yeah, but I have to bring one last one, the market profile.
Sure.
Very popular at Topstep.
Yes.
Also, Peter Stottlemyre was my mentor. One of the greatest men I ever met in my life.
Nice.
He develops a methodology developed by Peter Stottlemyre, used by traders to analyze and understand price movements in futures and commodities markets. The market profile, based on a bell curve, is a graphical representation of price and volume distribution over time. It helps traders identify key support and resistance levels, as well as areas of price acceptance and rejection. The approach provides valuable insights into market dynamics and can be used to make trading decisions. So, just to wrap it up, the technical analysis is as old as human civilizations. Getting a marketplace with documented price gives us data that we can then analyze. Many different ways of analyzing the price data, as we've seen, and responding and making good decisions based on patterns.
Mm-hmm.
Many different ways. It's been around it's been around since ancient times, and it's only been enhanced in the last 30 years by the advent of computing power. Technology makes market analysis even better.
Right. Like we said earlier, sometimes it's right on, and sometimes it throws you way off. But it helps with decision making, and I think that's what we're reaching out for. Some of us combine multiple indicators and patterns. It's the ones that I talk to traders, and they've got all these indicators and on top of each other. And sometimes, like they say, less is more. Sometimes you've got too much. I mean, it's something you got to figure out, and it helps traders make, informed decisions when to enter and exit a trade. Obviously buy low, sell high. So it reduces reliance on emotions and impulse and recklessness. So it's sort of it keeps you in line. Let's put it that way. It's like a seatbelt on a saddle. It's going to keep you on the horse much longer. So, but anyway, I tell you, I learned a lot here. I did not know that technical analysis was way back when. Mesopotamia, huh?
That's Sargon of Akkad.
Maybe,
and now you know.
And probably even before that, I could see some cavemen, I got a bunch of clams here, and you've got a fur, and you got one fur, and I got 1,000 clams. I mean, it's supply and demand. I'm going to want a lot of clams for this one fur. You know what I'm talking about. It probably wasn't in technical terms, but obviously it was. You got a lot of those. I only got one of these. You want it that bad? I want a lot of those. So good stuff, though, Coach Paul.
Thank you. Wilma wants a fur coat for Christmas.
I got a saber tooth. Saber tooth. Or do you want the woolly mammoth? Now, Paul, you've got, which I really dig, At the Buzzer. Tell us about what the hell is At the Buzzer.
Well, at the buzzer, Coach Jay and I and other coaches review the day's action. We also use a lot of technical analysis from our different perspectives to review not only the NASDAQ and the S&P, crude oil, euro currency, corn. Coach Jack will join us with corn and give analysis on different markets and review, see where opportunity comes from. We've been doing it for a few months now, and I've learned a lot from other perspectives also. I think it gives traders a good, valuable insight into different thought patterns and markets, and you can gain valuable information or think differently, challenging yourself, and also looking at different markets. I know Coach Jay and Coach Dakota have been trading the Nikkei. So it's a great classroom found on Discord at the buzzer. And also we have, each coach has his own classroom. I'm going to put today's history of technical analysis in a PowerPoint presentation in my classroom, Coach Paul, if you want to review it. But yeah, at the buzzer, please join us. And sometimes we'll bring on a trader and invite them to give his analysis. So a place to come and learn and review.
Awesome. And that is in our Discord. If you are not one of us members in the Discord, what I'm going to do here is I'm going to post that link to get you in there. Let's see here, Discord. Here it is. This will get you into our Discord channel. And like Coach Paul said, there's a lot of good stuff going on there. We've got a lot of different channels. As a matter of fact, Anne-Marie Band's talking about crude. She posted some stuff in the energy channel. So if you're a crude trader, you're going to get stuff like this in our Discord channel. There it is right there. Cool. All right. I really appreciate those that stuck around here today. The 816, the 816 watching right now. Props to you, and thanks for sticking around. I tell you, it was nice to have something a little different than what we're sharing here throughout the day. The history of something that we use just about every day in trading. So that was pretty cool, Paul.
Oh, thank you. I'm glad we could share this and open some minds.
Yeah, it's a little different.
It's a little different.
Mix it up.
Live it as we learn. And I hope also this wasn't designed to be an all-knowing technical analysis. Get an idea of the history, find out different ways of a technical analysis, and enhance your knowledge. Maybe something is there that can help you become a better trader.
All right. Any last words, Coach Paul?
Yes. I hope everybody gets something out of today's hour. I encourage you to always keep an open mind and discover new perspectives that can help you become a better trader.
Awesome. All right, my friend, all the best. And for those, we'll be back here tomorrow at 8 a.m. Central Time we've got the opening call with Hogan and myself. So get some rest. The markets aren't closed yet, but we are going to close up shop here. So have yourself a great evening. Stay healthy, stay safe, and we'll catch you tomorrow.
No, that'll be all. Just be sure to lock the door behind you on your way out.
Good night.
Good night.